Give it a few seconds, it'll catch up.
Hey, what's going on, everyone? It's Friday, February 23rd. We're having a marathon, and I'm 𝗏𝗏, and I'm a crypto addict, and I'm joined here by my lovely co-host Luba, and we've also got Maud, Beth, and Alex here as well. Welcome, guys.
Hello, everyone.
Hey, look at that. It's 1:11 my time. That's lucky. So we basically thought we would kind of change things up a little bit for this segment and just kind of get into everyone's background and crypto stories and just, get you guys can ask questions too. And it'd be great to, I think we're going to have some more people join us as we go here. So, yeah, how's everyone's day going?
Yeah, amazing. I think we need to wait a little bit for people to come in and join us because we are changing from one session to another.
Exactly.
Yes, I'm monitoring the chat for us as well. They're starting to come in as we speak. So yes.
Well, if you guys want, I can start with my story and then we can move into Alex. It's up to you guys. If you want me to start and get going, or if you want to wait.
Let's do it.
Sure. Yes, please.
Right on, right on. Yeah, so I first heard about Bitcoin in 2015. I had a friend, buddy Dave, come over and hang out in my studio with me, and he goes, "Jay, have you heard of this Bitcoin?" And I hadn't, and he says, "If you know it's good," he's like, "you buy a lot right now and thank me later." And so I didn't listen to him, but I did look into it a little bit, and I couldn't figure out how to buy it, and so I didn't get any, and I was investing just mostly in stocks at the time. So I kind of come from the stock world. Been investing for a number of years, and so I definitely had some money I could have thrown in Bitcoin. I really wish I had, but I did follow it, and I had the ticker on my screen for a while. But I would say like a couple weeks after he mentioned that to me, I just started noticing the price going up and up, and it was like it was like going up like $500 a day or something. It was just going up really fast, and I'm kicking myself. I'm like, oh man, he was so right. And so, I just got kind of addicted to it since then. I still spent a while and I hadn't invested in it, but then it was 2019, I believe, kind of just before COVID started. And I had a plan. I finally started listening to some podcasts, and I had a plan to start getting DCAing into it. Still couldn't figure out how to buy it at the time, but then the crash happened, the COVID crash, with all the stocks went down. I was actually in Cuba at the time, and I watched my whole stock portfolio fall and more in half and more. And I was out there and I had like no internet connection. I couldn't sell anything as I was watching it all come tumbling down. So that was pretty nerve-wracking, but I just held on, and then everything kind of went back up. But that was that point when I started really starting to invest in Bitcoin. And then I wanted to take it more seriously. So I started investigating what kind of clubs were at the time. So I got myself into my first crypto club in 2020, and it was called TCB, and it was more like a privacy community. And so I learned a lot about operational security and privacy coins. So I started investing a bit in Monero, and then I became kind of an advocate for a coin called Pirate Chain. And so I was getting involved with the Pirate Chain community and learning a lot about it, and bought a lot of Pirate Chain. And so I actually had bought Pirate Chain at like 6 cents at the time. And that thing started taking off and went to within like a couple months, went to like $16. And so I saw a lot of money rising with that investment. And then I didn't take any profits, of course. I didn't know about, I wasn't really a trader at the time. I was mostly just a long-term investor. And I'd always made mistakes selling my stocks too early. So I would, I had a bunch of bank stocks and some other stocks, and I would sell and then buy another one. But I wished I had just held it, because like a couple years later, if I would have just held it, I would have done really well. And so I made a lot of stupid mistakes selling too early. So when I got into crypto, I sort of had that long-term mindset, and I didn't really understand the 4-year cycle, and I didn't understand, that you should be taking profits along the way, and how volatile it is. And so I was kind of drunk on gains. You know, I watched like, I don't know, like $800 turn into like $140,000, and I didn't take any profits. And then, like, you know, about a week later, the thing started dropping, and it ultimately came all the way back down. And I ended up, you know, coming back down to maybe like $5,000 from that. But that was sort of my first big mistake that made me want to learn how the cycles worked and how to trade and all that stuff. So I had also been working, or I had also signed up for a bunch of other subscriptions. So I basically wanted to learn. After I made that mistake, I wanted to like sign up to every single club, read every single report. I just wanted to study hard and make sure I didn't make that same mistake ever again, and really understood crypto really, really well. And so I spent like every single day reading reports, and I started a Telegram group with a bunch of friends, and we ended up recruiting like 150 people into this big Telegram group, and we were just sharing ideas, and it got pretty chaotic. We had to eventually whittle it down to like 60 people, because and I was kind of going crazy. I was buying every alt that anyone was saying. It was like just throwing $200 at this, $200 at that, just chicken with my head cut off, no rhyme or reason, just serious FOMO when things were picking up on that last run, right? But anyways, reading lots of reports every day. And so I did that for about a year, just reading like 2-3 reports a day, almost sometimes. And yeah, and then so my brother was really into banter, and he always mentioned good things about it. I had never watched banter back then, but I'd always heard about Ran, of course. So, but my brother was always following picks, and he was always saying, "Oh, I'm doing really well with this pick, and I got it from Banter Show and stuff." So I was sort of tried to gravitate into the banter stuff and start following it more, but I didn't really do that a lot last run. So then, sort of in this bear market, I started getting into banter, and I had also another lady from my community back then had mentioned that she was a really good trader and having a lot of success. And she said she learned all of her trading stuff from Sheldon just by following him and his videos. So it was definitely a priority for me to really start spending time following banter and learning Sheldon and watching him more and stuff. So of course, when I saw that they had this school, I jumped all over it and threw my 100 down right away and was all over that training. I had already done some other training. I probably went through like 3 or 4 other trading courses from Udemy and random YouTube trading courses. And it took a while to really get the hang of TradingView. I kind of, it was like Chinese to me at first, didn't have a clue. And it took a while. So I was watching all kinds of videos, how to learn TradingView and trying everything on there. And now I really, you know, obviously when I got into the banter school, I already knew how to use TradingView really well. But I learned all kinds of different techniques. But when I finally had taken Sheldon's course, it just sort of like summed up and simplified a lot of the concepts that I was sort of struggling with. And it just made everything a lot simpler to understand. And it just took all these other sort of complicated areas that I was focused on and trying to learn trading, and it just kind of brought it all to fruition for me. So that was really cool. And then of course I went and took the 𝗏𝗟 school right after. And again, it's like more trading knowledge, but more on a macro view. And, you know, it even more advanced than some of the stuff I was learning in the sniper school. So it's just the perfect complement to sniper school. So anyone who hasn't signed up for the courses yet, definitely take, you know, sniper school first, then go to 𝗏𝗟 school. And then I encourage everyone to also get into the clubs that are available. There's Sniper Club and the 𝗏𝗟 Room. I was in both of them. I signed up for Sniper Club and I was in there for like 1 day, and I was like, I'm not leaving here for a year, because I mean, I've spent, you know, a yearly fee on other subscriptions like that in the past that didn't have like nearly the amount of value that Sniper Club has. So, I mean, even just like the airdrop room alone has paid for a few years of Sniper Club for me. So yeah, I encourage everyone to definitely check out the clubs if you haven't. And I guess there's some new clubs. I guess some of you guys would probably know better than me. There's the Front Runners and the In the Game Club. I'm not in those, but I hope to be at some point. But and in terms of my background, I just came from the music industry. So I'd always thought I would make all my money in the music industry, and I did do well. I'll just kind of finish this part and then I'll pass it on to someone else here. But I had a top 40 single in Canada with a rock band that I had with my brother, and we toured and opened up for all the top Canadian rock bands at the time, and had a single on the air and a video on Much Music, which is like the big video music station in Canada. So we did pretty well. We had like a little mini record deal with Universal in Canada, and the biggest, I guess, Nickelback's agent was like our personal agent. So he put us on the road with everybody, and he was from our hometown. So we kind of had a bit of a connection there. And then I got into the studio world. I ended up partnering with a couple guys in what ended up being the top studio in Winnipeg, where I'm from. And so I helped run this studio business and pick up more clients with them, and produced for probably like, I'd say about 20 years of engineering and producing artists in rock and hip hop and country and folk and all over the place. Had some awards. The studio had like a Juno Award, which was a pretty big deal at the time. And then we also had a celebrity stop in from Kanye West for 8 hours one time, and that built our entire hip hop business. So I still get calls about hip hop jobs every day, which all started because Kanye West dropped into our studio. So that's my music background, and now I've gravitated into crypto, and I'm hoping to do that full time. I pretty much am doing that full time because I'm kind of switching careers now. So hoping to just stay in crypto and trade and work with all you lovely people full time. But that's my story. So Alex.
That's amazing. I just want to say you need to tell people about your airdrops, about your Sniper Club airdrops, because you are so good at that, really.
No, thanks. Yeah, it wasn't that hard. I mean, I know that Alex and some of the other people in Sniper Club have gone down the farming route, and that stuff looks pretty complex to me. I haven't had a lot of time to put a lot of time into that, but the ones that I got were I guess pretty much the two biggest drops of the year, more or less, the Dimension and the Tia. So my story with the airdrops is I had an OG friend from my community last cycle, and he was a big bullish on Atom and what was to come in the future for Atom. And I didn't know a lot about it. I just kind of trusted him. And he's like, if you know what's good for you, stack some Atom and get that staking in a Keplr wallet. And he told me that last cycle. So I had all that.
Yeah, there's another airdrop, I think, because I'm qualified for that, and two more, another osmosis one on Keplr as well.
Yeah, it's amazing. So I already have.
Jay had a huge from Dimension, which is good.
Yes,
it's amazing.
It was because of Celestia. I had all that Atom staking in Keplr that far in advance, and then I had also been reading all those reports. So I had read a report last cycle by a company called 𝗪𝗏𝗡, and they put out these reports on different things that are coming and trends to watch out for. And so I had heard to watch out for this Celestia like long ago. And so I had it on my list, right on my computer. Just don't forget to get Celestia the second it comes out, and just like pay attention for that one. And so I had heard that airdrop was coming. Yeah, I heard about the airdrop that was coming from Atom. And so I was ready for it, and I went and I redeemed that one. And that was even before I joined Sniper Club. I was ready to go for that Celestia one. And then I got a massive drop for that. And so that was an amazing drop. And then obviously, as Simon mentions in the club, these things have a snowball effect. So from Tia, now I was able to get the Dimension, and then we have more to come from the Atom and Tia. So it's amazing stuff.
And Jay, just to add to that for people who are listening, don't think that just because you're not too late to this, right? No. We're just getting started, and it's really easy to think, oh my God, I'm not going to get one of those airdrops. There is plenty of time. So watch the shows, do the research, join the Sniper Club, learn. You may decide airdropping is your thing. You may decide leverage trading is your thing. You may decide investment is your thing. The nice thing is that there is an avenue in crypto for everybody, right? Wouldn't you guys agree with that?
Yeah. And why we are doing this stream right now with our stories, that's why we want to tell you guys. We've been through so many different stages, but we are still here, and you can do it. Yeah. Everyone can do it. You just need to stick. You just need to get your goals. And I can tell you, as a blonde girl, if someone is out there, I just broke this matrix. We can do it. Even the blondes can do it. We need to stick. We need to stick. We need to go. And that's why we are here to tell you these stories about us, that we started someone long time ago. I started just a couple years ago, same day with Sheldon. But now we're going to go to lovely Who is the next? Who is
Alex,
the next?
Alex, share with
Alex,
us your story. What's your background and how did you get inspired and get into crypto, and tell us some of your failures, successes, and stuff to inspire people listening.
So it's really interesting. I would say I'm probably the newest one of all of you guys, and I'll start with my background first because it's sort of how crypto got onto my radar. So I worked in the entertainment business, and I had a really niche area, which was I represented talent, celebrity talent, for their brand endorsements. Okay. And pre-FTX days, you know, when every celebrity was starting to do their own coin, like you'd hear Manny Pacquiao and Mike Tyson, in my business, we'd get like a new group of people coming in each week wanting to do a celebrity crypto coin. And, you know, I'm not going to get into all the details, right? But there was a lot of legal compliance issues, and you can't just put a celebrity on something that you haven't fully vetted. And for those of us that, you know, that are in the States listening to this, right, we had SEC considerations for those types of negotiations as well, too. So basically what happened is the mantra was, oh, you know, crypto, it's dark money, it's dark web, it's not real. You know, that was the narrative. So that's how I sort of first started hearing about crypto. And I was too busy working that I never really, you know, focused on it. And then I'd hear the assistants, like the young 20-something-year-olds in the group, they're like, oh, we're trading this Bitcoin. And I, again, didn't think anything of it, right? So cut to COVID happened. And I myself decided, like, okay, I need to start learning to be responsible for my own money and my own research. I can't just like have someone else manage that for me. I need to learn and engage and push my brain in that way as well, too. And so I got into a group, a Discord group, and that originally it was more NFT geared, but they taught us everything, right? So like I didn't know how to set up a MetaMask wallet. I didn't know two-factor identification. I mean, and this was maybe a year and a half, maybe 2 years ago. So this is how new it is to me, right? So you know, I started learning about how to set these things up, and sidebar, which is that NFTs were sort of interesting to me, just coming from the, you know, brand and artist and endorsement space, right? Like that made sense. I didn't see it going in a direction that I felt was sustainable, but it's definitely going to be part of the ecosystem. Sort of a separate conversation, not for here, but I thought I'd flag it. Anyway, so I started, you know, going down the rabbit hole of learning to set some of this stuff up. And, you know, I'm the type of person who, you know, I'm alone. I don't have a real group I can like ask questions to. So I started Googling anytime I needed to like try and understand something. I'm like, what is this yield farming and like this liquidity and swaps? And oh my God, this doesn't make sense to me, right? It was so awful. Okay. And so the first person that I found, believe it or not, was Miles. And, you know, I would listen and I would feel so dumb because he's such a smart fundamental analysis. And I'm thinking to myself, am I in the right place? And then Luba and Beth will probably relate to this. You know, a lot of male energy in crypto. I'm like, there are no women here. It's so hard.
You can break it.
Nice.
Right.
Yes.
So that's how I found sort of the banter family. And from there, I got to Sheldon, and I was just blown. In fact, before I got to his shows, I got to one of his live trading sessions with the OGs. And then I got to his story of how he got into this space. And I was just blown away. And then, you know, Tehran. And then when the school started, I joined the school, and that was sort of a game changer, because there I was like, oh, okay, now I found my people in my community. It took a little time, but it was great to find these like-minded souls. And then, of course, going into Sniper Club, where you could ask questions. And then as I started doing this, right, I always like to say there's sort of 3 buckets of crypto. There's your portfolio and your investments. There's your leverage trading. And then there's maybe like a midterm spot trading. But it took me a lot of time to sort of start learning about this and figuring it out and figuring out what areas I wanted to go into. And so my thesis, again, this is just me coming from my entertainment background, was okay, we're going to have retail adoption for this at some point. And so I'm going to focus my research on the areas where I believe there'll be retail adoption, which is gaming and AI.
Yeah.
And so then I started following, I got really into following Hustle. And also the Cosmos ecosystem. That was another thing I felt was going to get mass retail adoption. Again, I'm not saying that's the right way to go. It was just my thinking on this. And I got into sort of learning about that, researching, improving my brain, learning how to make investments, reading the 𝗪𝗏 reports, figuring out when to follow Twitter, when not to. Psychology is another really, really important part of the trading. I didn't realize how important psychology of trading is, right?
I think we've all realized that lately. Yeah, we've all realized.
And the club actually has a psychology section, which I think is probably the most important. Look, everybody's in this to make money, right? But to make money, you have to understand your relationship with money. And that's something that's really, that's a whole separate subject. But if that's your jam and you're working on like vibing at a higher frequency, sorry, California girl here, we're like hippy dippy. But that's a really valuable part. And to also have people, when you're making mistakes, who you can be like, oh my God, I screwed up, or wow, I did this well. It's such an important thing. Let me bounce my idea off you. Let me bounce my research off you. Let me share what I've done. This may be of interest to you as well too.
I'll just interject with that idea as well. Like, I mean, I completely agree that having a group or a club is super essential when you first get into crypto. It was really the key to my fast tracking and not making as many mistakes as I probably could have if I didn't. So guys, definitely come join the Banter fam and join the crypto school and see what it's all about. If you haven't already, I'm sure most of you have here, but it's definitely key to have a group of like-minded people that you can, like a study group, and people you can run things by off of. So.
And it's interesting because like I don't really talk about crypto with people outside of the club. I'm just sharing this transparently because I still hear a lot of like crypto's a scam, crypto's not going anywhere, it's a Ponzi scheme. But again, for me, coming out of my entertainment background, right, I've always been very forward thinking in technology. And so I've separated out crypto from the blockchain technology. And the reality of the situation is the brightest minds today are doing blockchain development. And it's the future. And I'll sort of share a story which will age me. But when I first started in entertainment, everybody talked about how Napster was the devil of our industry and we had to shut it down. I had a friend.
Yeah, I know the creators. Those guys are the ones that are the creators of Helium, by the way.
Yeah, but I'm going to tell you a crazy story. One of my close friends said to the record label, she was 20-something, working at the label, she said, Napster's great. We're going to be able to figure out who's streaming our music, right? And then we're going to be able to run tours where we've never run them before because we'll have the data. She was walked out of the record label. I kid you not, right? And so Napster was shut down, but like, look where we are today, right? Spotify, Apple Music, SoundCloud, so the reality is like
amazing, big time.
Like for me, when I see this and just, I know there are different people on their journeys here. This is a nascent technology and a nascent field. So don't think, oh my God, I've missed it. Or, oh my God, like it is constantly evolving and we don't even know all the uses in the application. And I think circling that back to Sniper Club and Sniper School is that in an information economy where the information is moving so quickly, to have a group of people who are dialed into this in any area you're interested in is an enormous gift. So I hope that was helpful and interesting to some of you, and I didn't ramble on too much.
We have so much in common. It's crazy. Great.
Awesome to hear your story, Alex. Thanks so much for sharing with us. I'm sure people learned a lot, and we'll have to get Luba. We'll have to hear your story because we haven't heard it yet. So.
All right. Yeah, I came to the crypto exactly the same day with Sheldon. And since that, like, let's say for all these years, like couple years, because I'm telling, like, I've been born on the bear market, because I came in the, let's say, the second leg of the last bull run, where I done all the mistakes you possibly can imagine, not in that stage as well. But basically, yeah, I did well, even didn't know about anything, just listen to banters, just follow to them. At that time, of course, was a time when even the brick can fly. You remember that time, everything went up hugely.
Yeah.
Okay, but my story, how I came to the crypto was through the scam. I've been scammed quite hard, but I've been scammed on the stocks. But even I didn't know anything about the stocks. That was a COVID time when all these guys came out and started to scam people left and right, everywhere. And I was one of the person. They took me and my sister, and the amount was quite huge.
Oh, geez.
For me. And yes, but because I'm quite strange person, I wanted to know, what is the stocks, what is a crypto, what is that, what is this, how to work with that. And I started to trade. I started to open all the exchanges, but I started with the stocks. And yes, I did quite good. I went to the Discord with one stock guy, and they introduced me to ADA, Cardano. That was my first ever coin I bought. And you know what? I remember it was my birthday and my husband wanted to give me a gift. And I was like, can you please buy me ADA? Can you please buy me Cardano?
I think ADA and 𝗥𝗏𝗄 are most. I think ADA and 𝗥𝗏𝗄 are most.
I bought Cardano.
Yeah.
All right, it's quite funny story to cheer you up, guys, because all the journey is, let's say, there was a lot of tears, a lot of cry, a lot, like the true roller coaster, up and down, up and down. The time when I started to watch banters, like I've been every day on every show, I followed them. The price go up, I made really huge amount of money, and of course, as Jay said, I never took the profits, never. I even remember I was throwing into, I don't know, like gala $20, I want to say pounds because I'm in England. I throw in $20, and these $20 went up 1,200, and guess what? I never took the profits, nothing. And yeah, that's how we learn. We've been like all in and out, just a roller coaster. Was a lot of tears, was a lot of hype, a lot of greed, everything you can imagine. I did all the mistakes, and I did them like not once, I did them 10 times. And I'm still here because, as I said, I made it. Now I understand what I'm doing. I know this language. I can speak, I can talk to these charts. I can be familiar. They are my friends. I can understand them finally. And that's why I never quit. But do you know what? I never wanted to quit. I knew it. It's just I just know, no, I'm not going to go away. I will stick here. Even I was so funny. I thought, if I'm not going to make it, I'm going to go to the South Africa and I'm going to squat the banter, and I will stay until I understand in the office. That was all right. It's just, I want to make you laugh, guys. But yeah, from what I'm trying to say, it's so hard. It is really hard. But if you have your goals, if you know what you want, and your mind is there where you are pointing, you will get there. I promise. And when I started with the banters, there wasn't team like that, like now. Yeah, there was shows, the YouTube videos, everything. But like now, when you have like crypto school, you have sniper school, you have whales room, you have hustle in the studio. I am a moderator there, by the way. You have everything, and you are spoon-feeded here. because I remember I could spend like 2-3 days just to open like Uniswap. There was no one to ask. I could spend a week to figure out how to do everything.
Oh, yeah. I still have missing Shiba on there. I know it's missing because I didn't do something right. You're right.
So much to know.
Yeah, it's just was so difficult at that time. But now this team is grown so much. It's like everything. And I'm so proud. I'm really proud. I'm here. And why I'm here? Because I want to give you back. Because I want to give you back, guys. Because the sniper team, I mean, crypto all in general, Banter team, they gave me so much education. And I just want to give you back. I want to help you. And we are here for you guys. And please don't quit. I know sometimes it's so mental. You just, because you don't understand why you did this, why you press this button, why it's a psychology. It's so hard and you are blaming yourself. But do you know what? Don't blame yourself, because it's a lesson. That's how you learn. There is no other way. To be really, really successful, there is no other way. You need to learn through your like tears, or like you need to learn from your mistakes.
I think everybody has a crazy horror story. Anyone successful in crypto that I know has a horror story. And that's what drove them to just study hard and get way better in it. So yeah. Because
really I have tears in my eyes now, how I'm thankful to Crypto Banter.
Seriously.
For all this.
Łuba, you're an awesome mod, and same with you, Beth. You guys are just do such awesome stuff for the community. Super appreciative.
No, I would not be here if it wasn't for Banter. I would not be here. That's
and I'm a new mod, guys, as well. So I appreciate all you guys having me part of the squad.
Yeah, we are trying to say here that you can make it.
You can make it. You 100% can make it. You have to have patience and learn. Yeah.
But also making it isn't just like an end in of itself, right?
It's just the beginning.
It's the beginning. There's like there's a whole journey there that's going to be like ups and downs, and to have a group of people there for you to like share in your wins and also be there for you when you're in your downs. You know, and thank you guys for having me, because I'm not a mod and I feel very humbled.
We're so glad to have you. Please, it's amazing.
Yeah, thanks for being here. And Łuba, thank you so much for sharing. And I'd love to get Beth to share her story and give us a little bit of wisdom as well, Beth.
No, sure. So I got into cryptocurrency back in 2015 initially. I had a radio show and podcast on Podcast One Network and Voice America Radio Network. And it was just getting so big. I worked with athletes and celebrities and pretty much showcased their charities and what they do for good. And I own a company called The Sports Girls that builds events for athletes and celebrities. And I don't do that anymore. I don't have time. But one of my good friends, Jason Derulo, he's a famous recording artist and movie star. His sister-in-law is one of my closest friends in Florida. She was like, buy Bitcoin. I'm like, what's Bitcoin? Like, I didn't know what it was. No clue. She's like, go to Coinbase and buy Bitcoin. I think it was like $3,000 was my first Bitcoin that I bought. I did. I started increasing. And then I started watching Banter when they first started. So by me bringing up all of these celebrities, I was approached by somebody with the exchange called Voyager. This is very hard to say and get out. I'm not going to tell you the amount of money that I was scammed the first time. But I kept watching Banter, but I was so into touring with Voyager, and my whole role with Voyager was to bring in ambassadors, right? So I brought people like Mark Cuban, and I was a consultant. I have to say, I was never a full-time employee legally. Yes, because as you may or may not know, the Voyager exchange went completely bankrupt, and I was responsible for getting 10 or 20 very, very famous people involved into that, as you know, as Alex said, as endorsing. And I was personally hacked twice. And I can still call their CEO right now, even though he's probably would not answer. So I was hacked twice on their network, and then someone pretended to be Sheldon. Pretended right before I got into into the actual school. This guy was really good. So if you guys, nobody from Crypto Banter is ever going to DM you. We're never going to ask you for money. We're here to help you. But long story short, I fell for that. Took me for another $50,000, literally drained my trust wallet. And I was like, oh my God, like I've lost so much money. What am I going to do? Now I am blessed because I didn't know anything about trading until I joined Sniper School. And I just watched and watched and watched and watched and watched. I was like infatuated with it. I said, I want to be a moderator. I want to do this full time. And just I used to draw fibs backwards. I mean, Bruce will tell you. They'll tell you. And then finally I reached out to, I think it was Woz first and then Simon Chaos, and showed them my charts, and they were somewhat decent. So I became a squad member, and then I had eye surgery and could finally see charts. Bruce spent a lot of time with Bruce. In the interim, I still have all my athlete friends calling me, where should I invest? What should I invest? What should I do? So, there are a couple of them are in Sniper Club right now. Coach NFL, Coach Wilder, he was an NFL coach. He may or not be coaching another team soon. There's also a famous actor in Sniper Club, and he's an NBA player as well. So they come to me and I say, take Sniper School. They're like, well, you just do it for me. I'm like, no, come take Sniper School. Like, take it, learn it. And now Coach Shu he called me yesterday. He was like, thank you so much. Because, he's going to come on to the Sniper Club one of these days, to one of the live workshops, or if you guys want him. But, this school changed my life. I was lucky enough to take out X amount of Voyager money. And I said, wow, I need to learn how to trade. And my spot portfolio right now is up 95%. And I can read a chart left and right. And I'm so excited for the gaming community. I really do want to help become a moderator with that. And, I'm very excited. There's so much more to come. You guys are not late. There is no stupid question, and you just have to literally take your time. I mean, I just read your comment.
What do you think it takes to be a successful trader from everything you've learned now?
You have got to have patience. Don't jump in. I mean, everybody thinks, oh, green, buy. No. Because I used to think that way. And you need to learn to take your profits, but you really need to, everyone says we're too late. Well, I'm buying Bitcoin. I will admit this. I buy Bitcoin every 2 weeks. I don't look at the price. It just comes right out of an account. I use everything in Sniper School. I do use some other, things for Confluence like Lux Algo. There, we had some great presentations this morning, that the alpha that the school brings, and learning from Thales and our other mods. Obviously Dylan, Bruce, but you just have to have patience, and you have to be willing to admit, oh my God, I'm wrong. Like, I messed this up, and know what your tolerance is. And in your mind, you have to take emotion out of it. Don't fall in love with the token. I'm not a brand. I mean, I did go to Bitcoin last year. That's where I got to meet everybody. I was only expecting to be with, the Banter team for a day. I ended up working with the crew the whole entire time.
Can I add here as well, how to be successful and what to do? It's just you need to treat your journey as a business. You need to be serious. You need to plan. Let's say, do you know any business are succeeding? Yeah, maybe some. I'm not saying not all of them, but most of the businesses. You need to work some years to grow this business, and you need to plan. There should be a plan. Otherwise, it's so difficult. When you don't have a plan, how are you going to achieve your goals? You need to have a plan, and you need to treat this as a serious business, and then you will be successful.
And Luba, can I add something to that too with the business? The crypto space, I forget how many different categories there are of coins and how many coins. You cannot be a specialist in everything. So really pick something that's interesting for you and get good at it. That is also another thing no one tells you getting into this. There are coins that I'm sure are great, or projects. I don't even touch them if they're not part of the sort of area that I'm into, because I don't have the time to
100%.
Yeah.
100%. Yeah, narratives. Like, and don't buy too many tokens. Like, you can't be in everything. Like, for me, I picked 2 tokens for my narratives.
That was my mistake. That was mine.
Yeah. No, I mean, I still have too many. I do have too many, but right now most of them are profitable. And you just have to take profit. Like, for my long-term spot, like, everybody asked me, what's your strategy? What's your strategy for my long-term spot? If it goes up 50%, I take 20% out. Every time it goes up another 25%, I'll take another 10% out, and then the rest I'll let it ride. The bull market, I believe, is coming. I believe, still starting it right now with the Bitcoin halving. For those of you that don't understand what a Bitcoin halving is, it literally depletes the supply of Bitcoin. The time they mine Bitcoin, it depletes them in half. So that's coming up 50, 60 days. I know it's in April sometime. So you guys are not late. You just have to, like everybody here said, just
you're not late. You're not late. I'm reading. I am reading one comment. I'm reading one comment. Like, I still know no one in crypto, mostly due to my demographic of older female.
That's what we're here for.
Guys, I'm 50 years old and I'm just doing this one, and it's never late. It's never late.
No, exactly. And people will think you're crazy. Like, my friends, they're like, what are you doing? I'm like, I'm trading crypto. They're like, well, are you making money? I'm like, well, I bought a Tesla. They're like, with crypto? I'm like, kinda. Yeah. So yeah, I'm doing well now. And I lost so much money. Like, I almost want to kill myself. I really did. My entire savings account gone, but I've made it back and more. So because of this, literally because of this community, and that's what we're here for. And that's what you guys need to know. Doesn't matter. I don't care about the famous people. I don't care. I don't care who they are. They're either good or bad people. But you know what? The ones that are getting it. They're getting it, and the word is spreading, and they're coming to Banter. We're bringing them to Banter Cypher School. And
you see, we have Aaron here. Hello, how are you doing?
Hi.
I'm great. How y'all doing?
Yeah, good. Can we see your story? Can we hear your story? How is your journey?
My journey, well, I started in crypto back when the smart contracts come out. My first token was TRX. I got into a project called 𝗏𝗏𝗏𝗏, and there was a little odometer there. Every time you look at it, I had money in there. So, and the objective was to wait 14 days and then reinvest it again, because it was staked on this site. And on day 12, I was going to take it out, and I didn't. Day 14, I woke up and it was at 0. So,
oh man.
So that was my first adventure in crypto. I remember back in when crypto first came out, me and a buddy of mine we were interested in it, but our thoughts was, nah, this is a scam. We watched it for weeks, months, and it's like it'd go up and then it'd go down, it'd go up and it'd go down, and this is still back before it was even $1,000, but originally that's it's a scam. But as I went through the .com days and stuff, I've seen a lot of opportunities I missed out on, like Google. In 2000, I didn't even know what a search engine was. So, but I missed out on so many opportunities. So that's what really made me intrigued with crypto. Jay, you had mentioned that we all have a story, and yes, any of us who've been in crypto for a while has a story of some sort. And one blessing about Banter, for those of you who are new, by what they're going to share here is going to help you eliminate a lot of those mistakes. My passion now, because of my story, is to protect people from clicking on links, accepting DMs from anyone. You need to really know who you are, who's on the other side. I know you're excited to come in here and make some money, and we encourage you to make new friends, but don't just randomly accept DMs. Get to know them in chill and chat or on a Zoom call, have some conversations with them first before you start accepting DMs from people.
Absolutely. I don't accept DMs because please don't take it personal.
And links, if you ever see a link, don't click on it.
No.
No.
Never
Go
click
to the
on a
website.
code.
No. You don't know it.
Never click on a code.
No.
Never click on a code that anyone sends you. I once got my WhatsApp hacked. So you just click on one link and they can have control over your entire WhatsApp. So you got to be careful with every link. Exactly.
Yep. So
Yes.
yeah, just be careful clicking links if you're looking for a wallet address, or if you're looking for a website address or something. Go to the website, look it up, and make sure it's a secure site and what you're looking for, because these scammers are very cunning. They're very intelligent, and they're coming up with new ways as this world is being invented. They're coming up with new ways, and so you got to be very, very
can
careful.
I add something to this if I can?
Oh yes,
please, guys, and please, guys, don't be embarrassed that you've been scammed, because this is how you feel. You feel so stupid. You feel so embarrassed. You are like, everyone is like, oh, you think, oh, people are laughing at you now because you've been scammed and everything. No, they are so professional. They are.
Yeah, they really are. They are.
They are.
And they're so cunning. They'll come and get the person who knows better as well. And as I continue my story here real quick, several things happened, and so you heard the first part of my journey. I went ahead and I went on and got involved in this project, and I lost this substantial. To me, it went up tens of thousands of dollars, but it was to me it was a lot of money. I mean, it didn't hurt me financially, but because I knew that was play money, it was gambling money, and so anyhow, I was so upset with this that I lost this money in 14 days, and I put it into a project that I thought was a legitimate project. It was called 𝗪𝗪 Wallet, and what this wallet did was gained you interest. You put it in there, and they kept it, and you got interest off of it, and so I traded everything in that I could scrape up from this last project, and I put it into this 𝗪𝗪 Wallet. I traded it all for Bitcoin and ETH and just staked it in here. And I was making some money in there. Well, guess what? 𝗪𝗪 Wallet went under as well.
Yep.
So I got scammed a second time. So I lost the remainder of the money that I had originally put in. So that was that put a very bad taste in my mouth about crypto again. It's like, but here I put it into a legitimate thing, and I may get some of that back. It was still in process of possibly getting 30% of that back, but again, it was a legitimate project. So you just gotta be the one thing you'll hear often: if it's not your keys, it's not your crypto.
Absolutely,
if it's on an exchange,
so important.
If it's on an exchange, it belongs to someone else. And
exactly, get a Tangem or a Ledger or a Trezor. Tangem's the best. It's like a credit card. Done.
And at the very least, if you're not going to do a hardware wallet, I like to use a hot wallet called Exodus, which is a multi-chain wallet. And at the very least, at least have a nice wallet like that, and then maybe you could always connect a Trezor to it later on if you have to.
Exactly, and there are other things like you're right. There's Phantom, there's Soul Players. You can have hot wallets that only you can get into. Just make sure you don't lose your seed phrase. Write it down.
Yeah, and don't write it down on your computer or anywhere.
Or phone.
I write mine down. I write my seed phrases. I write my seed phrases down in 2 scribblers, and I have one saved at one location, one saved at another location, and I have probably 20 wallets, and I have all saved in a scribbler. So.
And the other ones are safe in the bank.
And the reason these are safe, and as long as you don't give somebody your keys, the reason these are safe is because it's not actually in that wallet. They're actually on the blockchain, and these are wallets that are windows into the blockchain. So that's where the tokens are actually stored.
Exactly.
And so as long as you don't give up those seed phrases, you're pretty safe in those wallets today.
Awesome. Great to hear your story.
Yeah. So
great to hear your story, Rockin' Badger. Thank you for sharing, man.
Yep. Thank you for having me.
Yeah, man, that was amazing, man. Can you guys hear me okay?
Yeah, welcome, brother.
Welcome.
Thanks for joining us.
Oh, shit.
Thanks for joining us.
Yes, it's a journey, but don't give up, you guys. This community is here. I mean, I've been scammed. I've met Charles from Cardano, and I got scammed by him too. Not him, but their foundation. So we've all been through it. Just study. You've got a team here. We're here for you in Discord. Someone's in there 24/7. The Sniper Club in the Whale Room. If you've not take Sniper School first, then please take Whale School. And if you have not joined, Sniper Club or Whale, there's a Whale Club as well. So just reach out to us, and we'll be glad to help you with anything that you need.
Yeah, tag us anytime. We're mods in the community, so if you have any questions at all, come hang out with us and chill and chat anytime, and we'd love to help with anything you need. So I'm always available as well. So
yes, and I know at 5 o'clock we're doing a valuable lesson too. We're going to show you guys how to move crypto and how to do it safely. So I'll be back at 5 p.m. and then at midnight. Yeah.
Can you guys hear me okay now?
Yeah, you're great.
Oh, all right, cool. I think I had a bit of an issue there with my headset for a moment there. I've been sitting in the background listening to you guys tell your stories, and it's always good to hear other people's stories, because you realize as well that you're not alone in your own sort of turmoil. I mean, crypto is the wild west. We all have bruises and scars from this crazy world of crypto. It's like running around in a desert and playing Russian roulette with with random strangers.
Absolutely, but it's great. Yes. Well, yeah, I know you're up, so I'm gonna go listen to you and grab something to eat. But I can't wait to hear your session. It's very excited for you. I want to hear yours too.
Thank you very much. I don't mean to cut you guys short, so by all means, finish up. I don't mind chilling and listening. Yeah.
No, you guys can still hear me. I'll
give you closing remarks.
Yeah, I'll do some closing remarks. Just so again, you guys can hear me, right? My signal's a little weak. Can you still hear me? Yeah. Okay.
Yeah.
So again, thanks for listening to my story. Thanks for listening to Alex's story, and Luba and Beth and Rockin' Badger. Really appreciate everyone. I really appreciate being here, involved in the community, and thank you guys so much. And I'll pass it on to Chris for the next portion. Thanks, everyone.
Yes, I'm gonna go watch on the phone. And I'll help you. I'll watch the chat for you. So I'll just keep in the background. I'll watch the chat. I'm just going to go grab something to eat.
That would be amazing. Thank you very much, Faith.
Nope, sure. I'll be back.
Okay, guys. Have a great one.
Thanks, guys. See you in a bit.
See ya.
All right. Cheers. Rockin' Badger. What a legend. All right, guys. You can, Dave, you can take the share screen down just for a second. And we can just have a quick intro here. So for those of you guys who don't know me, my name is Chris. I have been involved with school for a couple of years. I'm currently a full-time trader. We essentially work, I work with the Whale Room. I also work with Crypto School. So a lot of you guys will remember me from the previous marathons that we've organized. And if you've joined any of the previous sessions, I always feel that it's really good to kind of come back to earth and have a solid session around the fundamental important components around developing a long-term perspective to trading. One of my mentors told me a long time ago. One of the guys in this community said, we essentially, as traders, we are gamblers, right? To put it plainly, we are betting on the direction of the markets. It's like going into a casino and throwing, $50 on red or black, and all that we can do as educators or as mentors or as trying to, uplift other traders in the community, all we can really do is look to build and teach responsible gambling habits, right? Now, this comes down to sort of the fundamental psychology of building that trading strategy. To give you a quick statistic, roughly 90 to 95% of people who trade fail, right? So essentially, you've got 5% of traders that actually make money during speculative investments. And I strongly believe that the majority of those people, why they fail, is not because of their technical analysis. It's because of their perspective towards the markets. You get into a trade and then the trade goes against you. You're like, damn it, fuck you. Okay, I'm going to jump back into this trade and I'm going to revenge trade because it has to go up now. And then you jump back in and you lose more money. And then so you get this emotional attachment to the markets that's essentially, at the end of the day, the only thing it affects is your bank balance, right? So what I'm going to try and do with you guys today is just go through a few sort of myths and a few fundamentals that I think as traders you guys need to understand and you need to be able to adopt if you are not yet a successful trader, if you are not yet following a positive P&L on a month-to-month basis, if you're not yet able to consistently make money trading, then you need to be listening to some of the fundamental myths that I'm going to go through with you guys and try and at least take it with a pinch of salt and pull it into your strategy in one way or another. All right. So David, you can bring up that the slides now. So we're going to I'm going to jump across here and just pull that to alrighty. Okay, cool. So we're going to keep it like this. All right. So we're going to dig deep into traders' mindset here a bit. So first things, successful trading is about understanding and managing probabilities, not certainties. All right. Now, let's just keep on this topic for a moment. We're going to get through as much of this as we can. These are obviously topics that we dig heavily into in the whale room. I'm going to go through as many of these slides as possible with you guys in the limited amount of time. For those of you who are with me in the whale room, obviously we dig into this a lot more. We go into the fundamentals. We build strategies around it. We build the portfolio around these solutions. We look at how we risk off and build trades. And basically this builds the fundamental framework that we can work on, not just technical analysis, but how do we look at the markets from a probabilistic perspective and not certainties, right? So with this statement in mind, okay, you think about, you look at your technical analysis, you're coming into a trend line, it's a higher time frame trend line, just like close your eyes and imagine this for a minute, right? You close it, you got your 618 lining up there perfectly, you got the 200-day ticking in, and they're all kind of crossing in that same little point on the chart, and price is approaching it, right? And you think like everything is aligning for me, the stars have aligned, God has anointed me in this moment, and I'm going to go all in on this position because this is the perfect entry for a long, right? And then you go in on that position, and what happens? But price now breaks below the 200-day, okay? Now price breaks below the 200-day, breaks trend, and you're like, it's wicking, it's going to be fine. You re-enter, right? Hit stop loss, re-enter. It's going to go back up. It's going to go back up, right? And what the trap there is that what you've gone into, you've looked at that chart and you've treated it as a certainty. There is a certainty that price will definitely move up from this current point, yeah, because all of the indicators align and say that price will move up right now, right? The one thing that you're forgetting though is that there is millions and millions and millions of people trading in the world, right? Now let's just take it down to a model of say 1,000 people. You've got 1,000 people in the world that are trading this in the entire crypto ecosystem. You have 1,000, right? Now imagine that every single price, when the price goes up, then that's because out of those 1,000 people, more people are buying than selling, right? Okay. When price comes down, means more people are selling than buying. That's the basics, right? Now think about this, right? Price could come down to say $1, okay? Now at $1, that means that that say 60% of the people are willing to buy at $1. Price goes up, okay, comes back down to $1 again. There's nothing to say that the same 60% of people are going to be willing to buy at $1 again. So that doesn't mean that that support is going to hold necessarily. At the same time, you might find that 200 of those people have gone out on lunch, right? They're out on lunch. They're not even looking at the charts. This happens all the time, especially in the stock markets. You hit a support. There was one dude, there will be one whale that was holding that support, gone out at lunch, support fails, right? So you can never actually know exactly who's trading the markets at any given time. Therefore, if you cannot know exactly who's trading the charts, you also need to look at the chart. You cannot look at the charts from a certainty perspective. You need to look at the charts from a probabilistic perspective and adopt risk management into your trading strategy, right? At the same time, you need to know that there is only one thing that is wrong in the markets, right? The markets are never wrong. It's only you that is ever wrong. So next time the markets do something that is the way they come and they wick you out, and I think this is important for a lot of you guys to hear, because it was also important for me to hear a while ago. You know, when the price comes down and it wicks you out, and you feel that you were so certain that that trade was going to work out, or price breaks below breaks below the point where you were breaks below your entry into an invalidation zone, and now you start adding to that trade because now you're buying it at a discount, right? Also wrong. Trade is invalidated. Get out, right? If you set up the technical analysis and you set up your risk management in a specific way, and that risk, you need to then stick to that risk management in order to be able to cut your losers quickly and build on your winners. All right. So I know that I would love it if I could listen to some of the chats here. If you guys have questions, I'll keep 15 minutes to the end, and Beth and the team in the background will hopefully come through with a few questions, right? So on to this point, right? Trading is a game of probabilities. No single trade defines you as a trader, okay? Let that sink in for a minute. I think this is going to more of the beginner traders. If you're not yet at a point where you are a profitable speculative trader, then these are the sorts of things that need to kind of sink in and become a fundamental component of your trading strategy in order for you to get to that break-even point and actually start recouping the losses, get to that point and make money. All right. Next slide. Okay. Your beliefs create your reality. And if you believe you're right, you always find the ways to justify your actions. Right. Now, on this slide, the reason why I put this here is because if you look at the markets and you are super bullish before you even look at the charts, all you're going to see is longs, right? Now, I can pull up a chart right now and I can draw a line and I can show you a long, and I can take that line away and I can draw a different line and I can show you a short on the exact same charts, right? So what I do in my strategy is I allow the markets to determine whether or not we're bullish or bearish, right? I look at the macro. You look at Bitcoin. You look at your Bitcoin, your ETH charts. You look at your S&P 500. You look at your DXY. You look at your macro indicators. For those of you in the whale room, you'll know exactly what I'm talking about. For those of you in school who've joined my mentor sessions, you'll know what I'm talking about, right? You guys build that green sheet, get the charts together that then give you an indication as to whether or not we're actually in a trading day or not a trading day, right? Whether or not we should be looking for longs or shorts, right? And if you can allow the markets to determine that for you, then you're not going to be entering into the markets with a specific perspective and then find yourself kind of creating the environment that you're looking for. And then once you've now created this environment and it goes the opposite way, you're upset, right? You're removing emotion. That's the goal here, guys. We're literally working to take emotion completely out of the picture. Okay, emotion out, mechanics in. You want to be a machine. Look at the charts. You want to understand what is my risk. Okay, cool. If there is no certainty, my technical analysis is done, right? There is no absolute, I know that there is no certainty that this trade will go in accordance with my TA. Therefore, the next logical step is, if it goes against me, how much money could I potentially lose in this trade, right? And then I go, okay, cool. If I can lose 2% in this trade, so then from that 2%, if my trading volume is $1,000, then that means that 2% is $20. What is that $20 as a percentage of my overall capital in the account? And then I go, okay, that $20 is only 1% or 2% of my the whole capital in my trading leverage trading portfolio, or otherwise. I can take that risk. I can accept that risk. I'm now going to take that $20 and I'm going to pay it to the market. And I'm going to pay it to the market to see whether or not my trade is my technical analysis is accurate or not. And either the market will tell you, sorry, you were wrong. Your technical analysis was inaccurate. And then you're going to go with your trading journal and you're going to go back and be like, okay, cool. Why was it wrong? Oh, okay, Bitcoin was actually losing a level there, and all right, cool, all right, that makes sense. All right, I need to make sure that I look for that, I look more closely at that in future, right? Or it's gonna say the opposite and be like, yay, congratulations, you get a 5x, right? So now you're getting to a point where you're taking that, you're moving away from the emotional attachment to the market, and you're building your TA, you're assigning your risk to that trade, and then from that point on, you're then putting it into play to see whether or not you're accurate. And the more and more times that you do this, the more and more accurate you will become, because you will then develop those strategies that then give you the ability to actually make money consistently through trading, right? And that is the gift that I've been given. And a lot of the other mentors and other people that you're listening to in this marathon have been given. A lot of us were given that gift through crypto school, through going through 𝗟𝗟le school, through going through sniper school, through listening through banter. So these are very, very good basics for you guys to get through. And then once you've gone through those basics and you've built the fundamentals, then come join us in the other products. For literally a very limited, very minor amount. You could literally trade a $1,000 account, $500 account, and comfortably cover those fees and still learn and build the next level of your trading journey, so that at some point within this year or within the next 2 years or 3 years, you are actually able to support yourself financially, drawing a salary on a monthly basis, like a lot of us do, and growing those portfolios. But if you're not actually able to understand the fundamental components from a psychological perspective of what as like the important bits that come into play while you develop these, while you try and you focus entirely on technical analysis. I need to know how to draw my fib. I need to know where to draw my trend line. Do I include the wicks, or do I just include the candles in my trend line? And then where do I draw my supports and resistances? If you focus entirely on that and you forget about this part, I would say that's like going to gym 5-6 times a week, but having McDonald's as the primary component of your diet, right? As an analogy, okay? So moving on. I hope you guys are enjoying the session, because I'm literally talking to a camera, yeah. All right, so embracing uncertainty and learn to make peace with the unknown. There's those moments of uncertainty where opportunities arise, okay? So this, I want you guys to look at, understand, and put into practice from the, when you guys are looking to develop those trades, right? Look at it and understand the uncertainty, accept the uncertainty, right? And know that it's a probability, not a certainty. And from that point, you'll be welcoming that uncertainty and building it into your trading style. Okay. Now, Trading in the Zone. Trading in the Zone is a book written by Mark Douglas. If you guys haven't read it, I would say it's probably the Bible of all traders. It's the fundamental component. When I first read it, I was a newbie trader, and I was like, what is this guy talking about? He's just talking about mindsets. I'm not looking for a mindset book. I want to understand what the markets are doing. And I read it, and then by the time when I started reading it, that was my perspective, and I was like, no, I'm going to stick through it because people that I trusted in the space had told me I need to read it. Read it. By the time I got through it, I've now read it 3 or 4 times. It's literally, it's gold. Okay, so you guys need to get through to that. Okay, so, and what it teaches is about trading in the zone means being fully present in the moment, detached from the outcome, and executing your trades with discipline and confidence. Right? This encompasses in literally one sentence the underlying cornerstone of any successful trader. Every single successful speculative trader is able to do this one thing, right? And if you focus on getting that part right, and then you bring in that TA, right? You're essentially going to be prioritizing that P&L over the long term, and you'll be able to grow consistently, right? Mindset is everything, okay? Trading success isn't just about strategies. It's about mastering your mindset, right? Your beliefs, your attitudes, your emotions, these are the things that are going to impact your trading decisions, okay? So when next time you're going to take a trade and you get stopped out, right? And then you'll be like, damn it, I set my stop loss wrong. Let me get back in. No, you're not going to just get back in. You're going to reassess the technical analysis. You're going to identify why you got stopped out, right? You're going to take the time to look at the next few candles on whatever time frame you're playing on. If you miss a couple % with your next entry, that's okay. You're going to wait and see, where am I getting that shift in market structure? Why did I get stopped out? Assess the loss, and then taking a new mindset to the new trade and actually treating it like a brand new entry, not a revenge trade, right? So nothing wrong with entering again, just how you enter, that's what defines the difference, okay? Now, embracing uncertainty. I think we've covered this one quite well. Risk management. So think if you guys are going into a trade and you go all in, right? Now I take you back to that example where if you're going back into that example that I gave you guys, you got the daily time frame trend. You've got your 618 fib lining up. You have the 200-day moving average lining up. Everything's kind of like coming into that one little X, and you think, okay, cool, here's my trade. Okay. Now, at the same time, you can see, all right, the probability of a reaction in this point is high. But at the same time, even if there's a 70% chance that there is going to be a reaction in that point, there is also a 30% chance that it is going to tank straight through that support, and it's going to continue on going, right? So you need to first, before you take that trade, understand how much of my capital am I comfortable losing, or essentially, in inverted commas, paying to the market at this point in time, right? In order to find out if my TA is accurate right here, and then take the trade. Because when price breaks your support and heads for your resistance, right? This is the point in where you going to, if you haven't already accepted that loss, right? Or the amount of risk that you've taken in that trade is going to create emotion that is going to then control your trade, instead of your technical analysis controlling your trade. And then you're going to end up with this difficult situation where now price might have wicked through your entry. It has not been invalidated and you're considering closing that trade, right? Without finding a reason from looking at the new data that the market has provided you in the candles that have printed post your entry into that trade, to then determine whether or not there is further weakness or actually strength entering in at that support level. So you can now, looking into the mindset of a trader, instead of looking at a gambler going into the casino, right? Gambler goes into the casino, $1,000 cash and a credit card in his pocket, loses the $1,000, starts swiping the credit card to make the $1,000 back, right? You don't want to be the gambler. You want to be the guy who goes into the casino maybe with, $100 or $1,000 in his right hand pocket, and his left hand pocket is empty. His left pocket is empty. Everything he wins in the casino goes in the left pocket, and when the right pocket's empty, he leaves and he counts what's in the left, right? As a gambler, risk management, not my cup of tea, but just as an analogy for you guys. Risk management is a super, super important component, right? You need to protect your capital first. Capital comes first, then you look at making money, right? So you need to regardless of how super bullish you are with an entry, always consider the fact that this entry could go against you, right? And when it goes against you, because I tell you now, you might get 5, 10 entries perfect, amazing, great profits. The 11th entry can wipe your account, or you'll get 10 trades in a row perfect, and the next 10 trades will go south, and you'll go from $200 to $2,000, from $2,000 to zero, right? If you cannot adopt the principle of protect my capital first, right? And then after you're protecting your capital, that's where you get to the point where you're able to then make money, right? So this brings now when I in my session tomorrow at 6 a.m. GMT, I'm going to be going into portfolio development, right? How do we build a portfolio so that we can trade long-term, medium-term, short-term, right? How do we protect our capital overall? How do we trade medium-term on our spot portfolios? And how do we trade leverage portfolio? And if we go really, really wrong with our leverage portfolio and our medium-term portfolio, then how do we then protect the overall portfolio with our long-term, right? Now, obviously, this is something I'm going to be covering in a very basic sort of 45-minute session with you guys, but we do go into it a lot more in depth in the Discord service, right? In the when we do sort of weekly sessions, daily sessions on the whale room, we go into this in a lot more in depth on both topics. Okay, the trading your plan is essentially the next mistake that as traders we make, right? Think about this, right? If you were a scientist and you were trying to determine a specific theory or thesis around, the whether or not X, Y, and Z can happen, right? You cannot do one experiment and then from whether or not that experiment fails or succeeds, immediately change the experiment. You need to have a test pool. You need to run sort of 50, 100 tests, and then you look at the average result over those 50, 100 tests to determine whether or not you need to then adjust or create a new test to then take that scientific theory forward, right? Same thing in trading, as we are Fibonacci scientists. We need to develop a theory or a strategy that we then have. Obviously, you can get input from other traders, right? You can work with us. We help and we help build strategies that work for you, that you will be able to personally accept and acknowledge and trade, right? But more importantly, once that strategy is in play, you then need to trade on minimal risk, right? You risking 0.25, 0.5% of your capital, of your overall account, right? Or of your leverage account, and you trade that strategy for at least, I would say, 20 trades, right? You say that this is the strategy I'm going to follow. This is how I'm going to do my TA. This is what the risk to reward I'm going to be playing. This is the P&L that I'm looking for. This is this, right? You set your strategy in place, and then you take 20 trades. Before you're allowed to change anything within your strategy, okay? You're then going to take those 20 trades and review your trading journal. And when you review your trading journal, you're then allowed to then make adjustments to your strategy in a way that will then allow you to improve that P&L for the next 20 trades, right? Until eventually, after about 100 or 200 trades, you'll have a strategy that is so tuned to your own personal psychological barriers when it comes to accepting risk and making profits, that you'll be so comfortable in front of the charts that you won't need anybody else to tell you what to trade and when to trade it. You know, you'll be a part of you'll just be there in the community, and you'll kind of be that fish swimming with the whales, you know, and you'll just ride the waves. You'll know when to get in, when to get out, because why? You'll be confident in the strategy that you have developed, and you'll be accepting it mentally and ready to move, right? And you'll have also that data. Okay, cool, it started like this. Then I changed this, changed X, Y, and Z. Okay, right, sweet. You're looking at your chart. Okay, sweet. Next 20. All right, this was the results. You know, like a scientist, this is what we're doing. Yeah, we're building businesses, guys. Let's get through that. You know, let's get past the gambling stage of jumping into crypto and thinking you're going to get rich overnight. Let's get past that. Okay, because zero to hero to zero is a very quick movement, and let's look about how do we do this consistently for the rest of our lives, so we don't have to do anything else, and we can actually just enjoy our time, right? Now, there we go. So this comes into what I was saying now. Becoming an observer, detach emotionally from your trades, so you're going to be an objective observer of the markets and your actions, right? Consistency is key. All right. So where did we go with this? So we were talking about the how do we build a strategy that works over time, right? So this is why you're going to run 20 trades, then you come back, you reassess yourself, and then you take another 20 trades, and you're going to do pockets and pockets and pockets, right? Now, successful trading is about that consistent execution. And that consistent execution is going to come through building a strategy that you are literally able to wake up in the middle of the night and just, it's there in your head. You know, you can recite it, right? You know exactly how to trade, when to get in, when to get out. Okay, that is the mindset as a trader that I want everybody in the school to get to that point where you guys are able to have that level of adoption, right? Now, when it comes to avoiding chasing up every opportunity and focusing on quality trades, okay? Big mistake, personal thing. Big mistake that I made, where I lost quite a bit in the previous bull run, was I tried to like jump in on every single new shitcoin that came out in the market, you know, and I was throwing, you know, $1,000 there, and then, oh, okay, cool, this one's come out. Oh, there's a bunch of influencers that are telling me to invest into this. I throw $1,000 there, and then all of a sudden you've got all this money spread about over a ton of shit coins, right? And then when the market turns, those coins just go from zero to zero very quickly, you know. So the point is that you need to be able to structure that portfolio in a way that you're not you're following a process, but you're not getting bought into the hype that the hype jungle is very easily going to bring through in you. I see that Master 𝗪𝗪, Coach 𝗪𝗪 has joined us. Thank you so much for coming on, bro.
No, bro. Thank you. I did say that I'm going to come and support you, so here I am. I'm going to stay quiet.
Thanks very much, man. Well, I mean, you're welcome to pipe in at any point. I'm just running through a few more slides here, and then maybe we can have a bit of a talk around sort of what you think, what your perspective around sort of the mindset required to be a profitable or at least a decent trader, and getting out of the red. How do we as traders get out of the red? So that I think a lot of the people in the community here could learn a lot from you on this topic. Literally, you're the when it comes to like everybody's emotions, then there's 𝗪𝗪 kind of like, hold the line, holding the line. So I'm gonna love hearing some of you. Like, I think it'll be great to have your input and value here as well. Okay, so just a few more slides, guys. A couple more things to kind of imprint into your brains. The reason why I put it into a presentation instead of just talking is so that when you guys also review back to this, it's a bit more structured and to the point. Okay, so focusing on the process, not the outcome. So concentrate on executing your strategy well rather than fixating on profits. Process leads to consistent results. Okay, I think that one is pretty self-explanatory. We get to next one. Okay, ego-driven trades is the worst thing ever. Okay, if you guys are trying to take a trade so that you can post a very nice tile on the Discord or on your Twitter or something like that, like you'll find that those trades will also turn around and wreck you just as quickly as they made you. Okay, so focus on yourself. You're the only person you're competing with in the markets. Essentially, you're with yourself. Don't look at what other people's trades are looking like. You're looking at your own journey. Trade to prove yourself or seeking excitement can easily lead to you also liquidating your account. Bear in mind that you're not going into a casino. You're not throwing money on red. You're developing an investment solution that can sustainably support your own financial freedom for the future. Okay, that is a serious fucking thing that we're building here. So don't get bought into the egotistical, emotional rubbish that that can easily overwhelm us in this ecosystem. Focus on what your goals and objectives are. Build a strategy that's going to give you that, and then stick to it, and have systematic approach to how you're going to adjust it and how you're going to move money out of the markets. And this is the way that you're basing your entire theory around the analysis and not emotions. Okay. Then next thing, right? There's going to be you'll see a million different traders all giving their perspectives. Some will go short, some will go long at the exact same price action, right? So there's no holy grail. Okay, there's no one size fits all strategy. There is what works for you as a trader. Okay, what works for one trader may not always work for another. So you need to essentially, as you learn through the school, and as you then join the whale room or sniper club or one of the other discords, as you essentially grow and expand as a trader and as an investor within the ecosystems, right? The fundamental goal at the end of the day is, how do I eventually leech as much information out of this cesspool of information to eventually have a strategy that works for me, right? And then you take that strategy as a blueprint, and you're then printing it on top of anything that you find from any other trader, and you go, works for me, doesn't work for me, works for me, doesn't work for me. And this is the way that you then, instead of shooting all over the place, you'll actually be able to, trend the line towards profitability. Okay. Now, conservative approach. Some people want the conservative, some people not so much, right? But a cautious approach to risk can lead to long-term success, right? Prioritizing the long-term P&L instead of the profit of an individual trade, right, gives you of green at the end of the month instead of green, red, green, red, green, red, potentially red. It's like flipping a coin as to whether or not I'm going to have profit or loss at the end of the month. You want that conservative approach where you can have caution to the markets, right? Risk approach to the markets, right? And you then also focusing on preserving that capital, and then after you're preserving capital, maximizing profits. Another little quote that I took out of Trading in the Zone. Okay, we've got, I think, just 3 more slides here, guys, and then we're going to go into a banter. So self-discipline, developing the discipline to follow your plan consistently, right? Discipline is the key between strategy and execution. Another slide, right? This one we've discussed. When you're going to go through 20, you look at your win rate, you look at your risk capital, right? You look at that, you use your win rate to determine what your risk to capital should be, and essentially then you scale your risk to capital in line with your actual accuracy towards the markets. And when that win rate changes, your risk to capital also needs to change in order for you to maintain and stay profitable, right? Patience pays. Next topic. Okay. Next, I hope I'm not overwhelming everybody here. I'm going through quite a lot very quickly because we don't have a lot of time. But wait for high probability setups rather than trading impulsively. Patience is a virtue in trading, right? And finally, psychology over mechanics, right? So while trading matters, your psychological approach ultimately determines your success. And this is why I wanted to end with this slide, because now hopefully I'll be able to go into a bit more on this conversation with Coach 𝗪𝗪 over here around sort of there's this, you can do as much TA as you want. You can understand as much as you want about how Bitcoin, how the 𝗙𝗪 affects the S&P 500, how the S&P 500 affects Bitcoin, how Bitcoin affects Ethereum, how Ethereum to Bitcoin affects altcoins. You can understand as much as you want about the markets, but at the end of the day, it's that it's that psychological approach to the markets, not necessarily the mechanics, that is going to determine whether or not you're actually able to bring some level of success to your style of trading. What do you think about what I'm saying here, 𝗪𝗪?
No, it's absolutely right. I mean, this is what it is. I mean, it's too many topics. Trading, everyone should see this as a business, right? So when you get to a new job, your first day, right? You don't know what's going on. You try to touch, water and see what, how you fit in, and then you're trying to understand what's going on, and then, you're trying to fit into the whole picture, right? You need to, you're going to be quiet at the beginning because you need to understand what's going on, and then you're going to get cracking. So trading's the same thing. It's business, right? You come into this business and you have no idea what's going on. Maybe you have some idea, but you don't have the clear picture yet. And for you to come to join us as a community, as a school, that means you are seeking to fine-tune or learn the basics and foundation, or fine-tune your style and your strategy. So you need to go through all the stages, and the first one, it's psychology. And not a lot of people in other courses that have been seen around, they don't pay attention at all or enough on psychology for the people, right? When you open a course, they're going to say, hey, this is a candle, this is a wick, this is open, this is a close, next, this is horizontal, next, trend line, next, Fibonacci, next, go and trade, boom, right? Super fast course, you're done, you are the master now, off you go, right? And then, you're trying the strategies, you've seen 1,000 videos on YouTube, you've done 5 ebooks, you've done all, and then you start trading, and then boom, it goes to the red, and you say, oh my God, what have I done now? Why is it not working? Why, and why all the courses are so good, and when you do in reality, it doesn't work that way? Well, because no one prepared the other side. It's, the theory is all good, but no one said about the other fundamentals is how you're gonna be as yourself inside that trade, because you need to approach that trade and say, hey, am I ready? Forget about the market. Are you ready? Have you done the numbers down? Have you done, have you prepared yourself? Do you have your targets? Because a lot of people go into that trade and they don't have targets. Because the first question is, how do I get in? Where do I get in? Right? How much will I make? When do I buy my lumber? That's the questions that they have in their mind. They don't know the real target. And you need to do a homework and say, hey, I need to have a target. What's my target? My target is I need to make X amount of money for that period. You need to have a target. So how much do I need? I need X amount. Write it down. Hey, I need that number. Now that number can be various. It can be different for everyone, right? It's not a unique number. It's not a universal number. I can show you. I can talk about it. How you're going to get into that number, but that's a different subject. Find a number. Find the target, right? And then you need to divide that number and say, okay, that's my target for the year. Now I have to divide that to the months. How many, what's the target on a monthly basis? And then I need to divide that down. What is my weekly target? You don't need to go into the daily. You just need to have a scope and see where is your weekly target. So if you have an idea, say, hey, I need $500 per month or $500 per week. It doesn't matter. You have one number. Now you know what you need to work with. It's okay. You know what? I need to go and target that $500, whatever that is. Can it be done in 1 day? Maybe. Can it be done in 2 days? Possibly. Can it be done in 5 days? Most likely. Once you reach that number, you need to stop and say, hey, I hit my weekly target. I'm done. Now is my day off and walk out, right? That will give you some time to.
I think we lost Tellus there for a second.
No,
You're back. Okay,
yeah,
perfect.
Yeah. So,
okay, you're back. Yeah.
So you need to have that target and say, hey, I'm going to work on that target. So you need to have that day off as well. And then also you need to take profits and leave with these profits, right? Don't always cut back and leave the money into the market and you believe that you're going to keep compounding. You need to pay some money to yourself as well, right? So this is a business. So you need to pay yourself. Obviously, you're going to leave some money back because you need to compound, but not all the whole thing, right? You have bills to pay. You need to buy clothes. You need to buy food. You need to, let's say you want to go for holidays, right? Take that money and say, hey, I got the holidays money ready. So I book my flights early, right? So I got a discount and I got the money for it. So you know now that trading, right, paid your holidays. That will give you a great feeling. Say, hey, you know what? I didn't have to, save money because I made it from that trading. Maybe that's going to be a high hustle. I mean, a side hustle. It's fine until that becomes very profitable, and then to the point that you're going to say, I'm going to do this full time, right? Not everyone can do that full time anyway. I mean, that's not even bad. I mean, you can do part time and say, hey, I got a small target, maybe a car, maybe a vacation, maybe a better house or renovation of the house. Maybe I need to, pay somebody's college, my kids' college in the future. I mean, everyone has his own needs. You need to have targets, and then you need to break them down to small goals. How much do I need in a year? How much do I need to reach in a month and how much do I need per week. So you need to break it down. That will help you with your emotions, because if you don't have that target, you don't know where you're going. You don't know where to stop. You don't know how much hard you need to work on. So have that target down. Break it down into small bites and work towards them. And then once you reach that weekly target, take a day off. That is another reward. That hey, I don't need to work now, right?
I think we also just to add to this, sorry, Tyler, a lot of the time we get into trading and then we expect to get into trading and succeed overnight. We're living in this on-demand environment where, like, you buy something on Amazon Prime, you have it the same day, and then you get into trading and you expect to receive the same sort of turnaround from a time perspective. Like, this is a journey. It's a marathon, not a race. Like, it's your own personal journey that as a trader, you need to follow a certain process to get to a point where you can make money. Like a lot of traders, they're, like when you're planning your win rates against your risk to capital, a lot of traders should be having such a small risk to capital that they're making 2-3% a day on their capital, but now they're gunning for 20-30% a day instead, and that's where and liquidating accounts. That 2-3% a day can add up very quickly. I think you were the one that showed me, like, you can take $1,000 to like $100,000 or something in a year just by making 2% a day.
I mean, I gave that example in one of the AMAs that we had, that if you target minimum, right? No, I mean, no minimum, but let's say roughly, if you target 5% per day within a month, right, you double your account, and that is without compounding. And people they don't understand that. But if you do 5% per day and you trade 20 days, not 30 days, 20 days, you need to have some day off, right? Saturday and Sunday, it's time for you to have fun, spend some time with your family and friends, relax, right? And if you do that 20 days, 5% per day without compounding, it's 100% profit. So you double your account every month with 5% per day. Who's going to give you 100% profit? No one. So that thing in the social media that everyone's showing money, throwing money, buying yachts and Lambos and villas and have parties with girls and boys out there, all looks good, but I promise you that they had the money before they went into the markets anyway. So it's a little bit. Not, I can't say fake, but don't fall for it, right? You can get to that point, but maybe in a year, 2 years, 3 years. Don't wait to become rich overnight. And we're trying to preserve our capital, right? We need to make sure that we protect our capital because, as I said, this is business, right? You don't want to fail that business. You're not doing this for charity. You're not going to throw your money into the market. The market is anyway, it's a big sharks, right? They're going to come at you. So you need to find a way how to defeat, these sharks. You need to defend yourself. So we got the tricks. We got the whale room here. So what I usually say on the whale room is the whales don't swim fast, but very long they go. Right. So
good remarks. Good remarks, man.
Yeah. So
I'm not sure if there's. Are you able to see if there's any chats, any comments in the YouTube chat? We've got 5 minutes before we got Scott coming up for the next session. Just
someone says here, I need a Lambo. I say, okay, you can have a Lambo. Right?
Yeah, just work for it, man. something that I like. I think Talis and I both think is very like I can say is super important. Is it's not about getting rich quick overnight. It's about protecting capital and then scaling that capital. And once you've got profits on that capital, then you can compound those profits. You can start 5.5, 1% on capital, get some profits, and then take 5% risk on profits. You're able to then get some compounded effects on those accounts without risk of liquidation.
It's true. I mean,
getting that to the turning point is a big one.
Yeah, it's very important for people to understand that if you want to make a good profit, what matters is the size and not the leverage. So because a lot of people make the mistake and say, okay, you know what, I got $1,000. What if I do, instead of 10x, let's do 20x or 30x? It's not a big deal, right? In Forex, they do 100x or 500x. Why not in crypto? Well, I'll explain to you why. Because in Forex, they have a high leverage, that kind of numbers like 500x or 200x or 300x. That is because they don't go by units, right? They don't bet for the currencies to move by $1 up, right? They're betting on 0.001, right? They count in pips. So it's very fractal. Very, very, very fractal. That's why they have high leverage, for them to make worth it so they can see the difference. In crypto, the crypto is the most volatile market out of all of them. So you're already in a gray water. You are in a volatile market. You are having the high ranges, right? Why do you need to go down on a high leverage on the top of that? So you are increasing your risk instead of decreasing your risk. And so what matters the most is the size, right? So instead of you going with $100 on 10x, try to go with $1,000 on 1x. All right? The buying power is the same, but the risk is way, way different. So I'd rather go with, trying to compound. I understand that the beginning of your journey is very difficult and very hard. So always the start, it's a difficult one, right? Even in race. When the lights go green and the cars have to go like Formula One, right? The very first corner is the one that is very hard, right? After that, you can pick up the pace, it's fine. The full stress on the engines and the tires and the drivers is on that first corner, right? So it's the same with the trading. You need to have a nice, good start on your entry and the price action to move away. Once it's moving away, then you can relax a little bit and then you can do other things. And then you can compound. Of course, you can compound $100. Go for doubles. That's what I say. You need 10 doubles. It's not a big number, right? 10 doubles. You can start with 5 doubles as the first goal, and then focus to make these 5 into 10 doubles. Now, 10 doubles is not a big number, but if you put down a starting point of $500 and go all the way to 10 doubles, you're going to be surprised where you're going to reach. Nobody is telling you these little tricks. The targets, weekly, monthly, and the yearly, right? Annually. So have these targets and then focus for the doubles. Now, for you to hit down the emotions, use higher time frame. For you to start, do your top-down analysis, start with a high time frame. Then have one strategy alone. One strategy. And this is what you need, one strategy. And you need to stay very, very disciplined on that one. And I'll give you an analogy of a clock, right? The clock is very accurate.
I like this.
Yeah. But it does only one thing. it just goes in circles for a minute. It's just doing 60 seconds. That's what it does. It goes around and around and around, the same thing every 60 seconds. It's ticking. So for you to be the clock, right, you need to have one strategy. Don't change it. One strategy. The strategy is not the secret for your success. The strategy is a routine. You keep on doing the same thing with the same rules, with the same conditions. The success is your risk management. If you want to succeed, you need to have a very strong risk management. And the risk management is the one that's going to make you rich, not the strategy. The strategy is just keeping you in track. You're doing the same thing over and over and over again, no matter what. If it goes up, goes down, goes sideways, you don't care. One strategy. You can have 3 out of 10 wins and you can be profitable. And then you can reach all the way up to 7 wins out of 10. And you're going to be super successful. And risk management is make sure how much you're risking. Understand that we've got the tools. Come into the crypto school. Come into the sniper club. Come into the war room. We got the secrets. We got the tools for you. Ready. You don't have to do a lot of work. You just need to come here and listen to us, speak to us, follow us. And we're going to show you the way. We're not going to do the trades for you. I'm not going to press a button for you. I'm not going to put you, right? But I can open the door for you. A great door. Not just any door. The door. And you just need to walk through. The same way as I did. Because someone else opened the door for me. So I'm going to open the same door for you. Right? So the strategy is just going to keep you on track. It's a routine. The success for you to make money is the risk management. You know, what are you risking? Don't go high leverage. Go easy. And if you're consistent and patient, you're going to get rewarded. You're going to get paid. Take profits and take your time off. If you reach that target, daily, weekly, take the day off, have some fun, come back later fresh. And then the markets are not going anywhere. The markets are going nowhere. It doesn't matter if it's a bull run or it's a bear run. You don't care if it goes up or if it goes down because you have your strategy. You are a trader. This is a business. That business is 24/7 open. So don't think that, oh, they're talking now because it's the bull market. What's going to happen afterwards? Well, I'll tell you what's going to happen afterwards. We're going to be still here. Because we have a business.
Trade it up and trade it down. Yeah. I don't want to take too much more of Scott's time.
Hi, Scott.
I can say welcome, brother. Yeah.
Nice to meet you, man.
Welcome, yeah. Yeah, nice to meet you. Welcome, and one of the latest additions to the school mentor team, I think. So yeah, welcome, bro.
Thank you.
Tell us closing remarks. 1 minute. What is the penny drop moment for you when it came to trading your psychology into your technical analysis?
The monthly chart.
The monthly charts? Zooming out?
Zoom out.
Yeah.
Zoom out.
Zoom out. Yeah.
It was the time that I accidentally switched to the monthly chart, and when I saw the price action and the indicators, I was like, hold on a minute. Click another chart, other token. And it was like things was flying into my head. I was like, you can't be serious. I mean, is that so obvious? Is that so obvious? And then I was like, okay, what if I go to 2 months? What if I go to 3 months? What if I go to 6 months? I'm like, oh my God, I'm doing the whole thing wrong. So yeah, the penny dropped on high time frames. And that's where you killed your worst enemy, right? The weakest link to that emotional monster that we all of us have. The weakest link, right? It's the higher time frame. And then I found the key to the matrix. I said, how can I break the matrix, or how can I escape the market makers? And that was time. The answer is time. Ignore time. See the market and your trading business on the single axis, which is the price, not the time. Ignore time. You need to buy at $1 and you need to sell at $2. So you make profit $1. Now, how fast you're going to get there is irrelevant. You don't care about that. If it comes quick, fair enough. Enjoy it, because that will give you another opportunity to trade sooner, another trade. But the trick is, you need to remember that you need to buy as cheap as possible, right? And you need to sell as high as possible. Yes, timing is crucial. Timing when you enter the trade, but how long you're going to get there is irrelevant. You don't need to pay focus on that at all whatsoever. And don't try to rush things and force things with high leverage. That is a marketing trick for you to fall into the trap so they can grab your money, because that market is designed to grab money. You see, the final thing, and I'll pass that to Scott because I don't want to abuse the time. Remember, the markets, they were not available to the public. You need to have a special license for you to be into the markets and for you to trade. And in the 80s and 70s, there were a big hype about brokers, right? They used to have the license for them to trade within the stock market. So the brokers made the agencies to approach the retail, well, not the retailers, but the masses. So you need to go to a broker for you to trade for you, right? And you're supposed to trust these people because they know what they're doing, but they were salesmen, right? So they were ripping you off. Now it's even worse. You can trade it on your phone and you don't need a license, right? So that system is being designed to attract people. Say, hey, you want money? Bring your money in. But they don't give you the money back, right? So be careful, be careful. We have the solutions, we have the methods, we have the schools, we have the tools, and you're going to be just fine. I'm going to stop here. Scott, it's all yours, brother.
Thanks, Talis. Thanks, man. Scott, welcome through. I thank you, Talis, for joining me on the second part of my session around trading psychology. I hope that what we have shared has been of value to at least one person in the audience, because essentially, like I said at the beginning of the session, I'll say it at the end, like psychology for me was the ultimate sort of penny drop. It was the fundamental component that was missing in my trading. I took accounts. I could comfortably 10x an account, and just as easily as I would 10x the account, I would take the account straight back to zero, and I would do it over and over and over again. 200, 2000 to zero, 200. Then I go find another $200 and I go and do it again, and I find another $200 and I do it again. And I do it over and over and over and over and over. And it was only, and I say this as bluntly as possible, when I started to understand the psychological components of my trading strategy, it revolutionized everything. And it took me to a point where I can now comfortably trade and also live off that trading. And so please take everything that we've said today with a pinch of salt. But if you're struggling with similar things, take a hard look at and take a walk away from trying to understand more and more and more about the markets, and start to firstly understand more and more about yourself and what you need to do in your own personal style of trading to bring your abilities up to scratch and on par to make money. And your abilities might not necessarily be a 30, 40, 50, 100% per month. your abilities might be a 5%, 6% per month. But bear in mind that that 5-6% is a lot better than what you'll ever get in a bank, right? And that 5-6% will compound, and your skill will improve. And eventually, over the next year, you'll be at a much better level. And hopefully, with this community that we have built, that journey could go a lot faster. So, with those closing words, Scott, I hand over to you, brother. Please give us an intro as to what you're going to be covering over the next hour. I'm sorry we haven't been able to cover anything in the chat, but for those of you in the Discord, just tag 𝗪𝗪 or I, and we will definitely prioritize getting back to you guys. Scott, over to you, bro. What are we going to be going through over the next hour?
I have a problem, and I think a lot of people probably have the same problem. So I figured I would discuss it today, and that is time. Lack of time.
Amazing.
To be able to trade. Not everybody can be trading all day long. So I thought I would discuss some of the aspects I've come across with time, budgeting your time to trade when you have other.
Good. Fix it. That's the problem. Fix it. Well, half the solution is when you know the problem. That's half of your solution. Because a lot of people, they got the problem, but they don't know what's the problem. What's the what's causing the whole thing. But if you do know what's the problem, you're already halfway towards the solution. So fix it.
That sort of feeds into the psychology aspect.
Yes,
I have limited time. I don't have enough time to trade, so this looks good. I'm gonna take this trade. And you're gambling almost because you're lacking time.
True.
Okay, look, I'm gonna give you the stage then, bro, and sit in the back, Scott. We will definitely be listening in, man. And I look forward to hearing what you have to say.
Thank you very much. See you later, guys.
Cheers, man. I'll be off shoot.
No problem. Like I said, I have a problem, and that's a problem with time. Considering that I have a full-time job, I have family, I'm married, my kids aren't at home, but I still have a wife and a dog at home. So I don't have a lot of time to trade. So I'm going to discuss today some things that we need to consider when we want to trade, but we just can't do it full-time. Let me share my screen here. All right. So what I decided a good title for this subject would be Trading on a Time Budget. So just like financial budgets, time is a limited commodity to a lot of us. So how to be a trader with limited time? It's not feasible for everybody to trade from the moment they wake up to the moment that they go to bed. We might all want to be a full-time trader, but that's not likely to be in the cards for most people. So we need to come up with a way to be able to trade and trade profitably and properly, considering our risk management, while also not neglecting other things in our lives. So there are lots of things in our lives that demand our time, whether it's work. You might have a full-time job, you might have a part-time job, but that's time that you need to focus on your work and bring home the bacon, so to speak, support your family. So if you have work that takes you away from time to trade, you need to deal with that. You have family, you can't just ignore your family. I know I've heard people say, well, the next 12 to 18 months is the bull run. That's when you have to focus on trading. That's when you have to make your money. Everything else will have to be set aside and focus on making your money. That sounds good on paper, and some people might be able to do that, but not all of us can just ignore our family, or ignore our friends for the next 18 months. It doesn't mean you have to spend every waking moment with them and trade only for half an hour here, half an hour there. But you still have to spend your time with family, spend time with friends. Catch up. You can't be a hermit and focus solely on trading, because that's not going to be good for your health either, let alone your relationships. Then there's illness. Someone may have an illness that maybe makes them tired, makes them not able to focus all the time. That illness might cause them to only have a limited time to trade. And the other side of that coin is, if we get so focused on trading and put everything else aside and don't take time for ourselves, that can make us be sick. And then that illness becomes a self-fulfilling prophecy, and now we're sick and we can't do our trading. So it's important to budget our trading time so we prioritize what's important for our trading, prioritize what's important to make us successful and profitable traders, so that we can avoid those costly mistakes where we're rushing into trades, not taking profits, doing things because we're not paying attention to what we're doing because we're short on time. So the first thing you need to do is prioritize what's important for your trading style, what's important for you to do during that limited time you have to make you the best trader you can be. So on that note, I know they say that 3 points is the sweet spot when you're giving your presentation, but I managed to come up with 5. So I have the 5 T's of trading on a time budget. First one is trim the fat. Less is more. Anybody who goes on the internet these days or on X, social media, Discord, it's overwhelming, the number of tokens and coins that are out there. Number of projects that are looking for your attention. Number of people that say, you need to be in this project, you need this coin or that token. And it seems like every day it's getting exponentially larger, the number of these coins, tokens, and projects. And it's just, nobody can focus on all cryptocurrency out there. Even full-time traders, they have to pick and choose what they're focusing on and what they want to do, what projects are important to them. They might have more time to investigate and find more of those projects that are better to be involved in, but they still have a limited time that they have to work with. And I decided I wear a t-shirt today that would sort of describe our problem. Crypto never sleeps. And that's the problem. Crypto never sleeps, but we humans have to. So, we can't be awake 24 hours a day, 7 days a week, looking at our portfolios, looking at our charts, looking at new projects. Even though crypto never sleeps, we need to sleep. And to do that, we need to trim the fat. And coins are like food. If you consume more than you can handle, you'll be unhealthy, unhappy, and stressed. Like I mentioned earlier, if you don't take care of yourself, you're going to get stressed, unhappy, unhealthy, and become sick. You can make yourself sick. Just like if you were to overindulge in food, if you overindulge in crypto, you're going to be sick. You're going to be unhappy, and you're not going to be profitable. So the basic formula is, there's too many coins to track. Add into that, not enough time. That's going to equal bad news. So what you have to do is decide how many coins you can monitor in the time you have available. And we're not necessarily talking about your longer term investment portfolio where you have coins that you are keeping for the future and for bull runs. We're talking more so about the coins that you're trading with. And sometimes, and actually quite often, those aren't the same coins. Often you'll trade a coin that you want to trade to make a profit on, but it's not one you're married to that you're going to put in your bag and keep for investment. You have to decide how many coins you think you can focus on. You know how much time you have. You have to think, okay, well, how many coins do I want to spend time charting and looking for trades? With the amount of time I have, can I handle 5 pairs, 10, 15? Only you know that answer to that. But make sure that whatever coins you choose are ones that will A, potentially be profitable, and B, ones that you can trade during using your strategy and time frame that you want to trade in. And remember that your choices aren't forevermore. If a new hot coin comes along that you want to be trading and it has an opportunity, to increase your funds more than one you're currently watching, you could always take one that you're currently watching, put it on the back burner, and add this new one in so that you can spend some time with it and see if you can trade it. Remember, you're not choosing trading pairs forever. Just ones that you're currently using. You can always change those, trade them out, but be careful that you don't just keep adding new ones and adding new ones, but not removing some of the ones that maybe you're not as active in, because that's just every additional pair that you're trading and charting is more time focused away from the ones that you are being successful in. So make sure you don't make that mistake of just adding without removing some for a time period. Now, the second T is the time frame. And the time frame that you choose to trade in needs to complement your trading style. And the time frame that you choose to trade in depends on a couple of things. One, of course, is time. What kind of time do you have available? If you're a full-time trader, you can pretty much trade any style that you want because you're during most of your waking hours, most of your working hours anyway, you're in front of charts. You can keep an eye on things. You can be on top of it. So it's not really as important in that aspect for full-time traders to choose a time frame or a trading style and stick with it. Even though it is important for them to have a trading style and to have time frames that they typically use. But those of us who don't have full-time trading ability, we need to essentially, at least initially, until we get our feet under ourselves, we need to pick a time frame and a style that suits us. Not only the time that we have available, but our level of patience as well. That's also a factor. Different trading styles have different time frames as far as how long the trades are expected to last. So if you don't have patience, that's going to dictate somewhat what kind of your trading style that you have. First thing you have to ask yourself is, when do you typically have time available? You might have limited trading time, but it's not necessarily my times that I have available aren't necessarily the times available that someone else might have, depending on what it is that's taking your time away from trading. So some people may have several hour blocks at a time that they're free to trade, whether it's, they have their dinner, then they trade all evening till they go to bed. If that's your situation, one trading style to consider is scalping on the 15-minute time frame, because you're going to be in front of the screen for several hours, so that gives you an opportunity to find on the 15-minute time frame, to find a potential opportunity to take a trade that you can be in and out of in a few hours, potentially by the time you go to bed, if you're fortunate. Now, sometimes those scalps will turn into more longer term swing trades, but that's not what you're focusing on initially. It's based on the time you have available and how that time is set up, what are you going to do with it? So several hours at a time, consider a 15-minute time frame and doing some scalping on that. Now, maybe you'll have some at the start of the day and some at the end. You get up in the morning, you have an hour or two before you have to get off to work. Then you go off to work for the day, you come home, you have some dinner, spend some time with your family, and then you have a few hours before you go to bed. So in a situation like that, day trading on the 1 hour is something to consider. You can have a potential setup in the morning and have an entry that goes throughout the day, and at the end of the day, it might be you have time to look and check the chart again and see if it's something you can stay in or be out of. But at least you have that time at the beginning of the day and time at the end of the day where you can see what the situation is, see where your entries are. If you're in an entry, see if it's time to take profit. And it even goes the opposite way where, at nighttime before you go to bed, if you see a setup that looks like it might take you through the night, you want to make an entry, and then in the morning you can look at it and analyze it and see what you want to do with it then. With those two time periods at the end of the day and the start of the day, it gives you an opportunity to do some trading that doesn't necessarily involve you sitting in front of the screen all day. Although it does mean you need to set some alerts, which I'll discuss later. Now, you might not have blocks of time where you have several hours at a time or a few hours at a time. But for whatever reason, maybe you have random time throughout the day. You might have half an hour here, 45 minutes there, and you might have that 10, 11 times a day. So at times like that, it's hard to do scalping because, you're not going to know when you're going to be able to keep an eye on things. Same for day trading. Unless something pops out at you in that limited time you have, you won't not like to take a day trade. But what you could consider is doing the 4-hour time frame or 8-hour, 12-hour, 4-hour plus time frame where you're doing some swing trading. The trade might last you a few days. So as you have time, you pick a chart, pick a coin that you want to look at. So you start on the higher time frame, you start doing some charting, then you got to get back to work and you're not able to do anything at the moment. So then the next break you have, you can continue charting that higher time frame. And then when you're done the charting, you will hopefully have it set up where you have zones of interest where you will be considering placing your entries when the time comes. So now that you have that chart set up, you can set alerts again that will let you know when you're approaching a zone that you might want to consider taking the trade in. So, it's just a matter of taking a little bite at a time. Once you're done one higher time frame chart, then you can move on to another one. And before you know it, you'll have several charts that are set up and you have your analysis done, just waiting for an opportunity to make a good entry. Now, your level of patience also factors into the style that you choose. So even though you might have several hours at a time and you're scalping in the 15 minutes, if you're typically, that's good for people who have very little patience. Actually, let me start at the other end of that. If you're doing swing trading, where your trades can last for several days at a time, and it might be several days before you get an entry even, if you have very little patience, you like seeing the action, you might not be successful doing that swing trading because you're always jonesing to be in a trade. And if you're not in a trade, you start looking for things that aren't there and looking for entries that aren't optimal. So that's something you have to be aware of in your own personality. Because I know I tend to lack patience. So that leads me to, as I said, if I'm not in a trade, you start sweating, looking for your fix. And if you're not careful, you will find imaginary entries and make entries and trades that are not conducive to making a profit. Regardless of what you do, make sure you still do risk management and use stop losses. So even if you let things get the better of you and you make a bad entry, at least have a good stop loss in place to protect you from your stupidity, I guess. So typically swing trading, you need to have that patience where you can sit and watch. Same goes somewhat for the day trading. For 1 hour time frame, you still need some patience. Things are going to happen quicker typically than on the higher time frames. So you don't have to have true and utter patience, but you do need some patience. And like I said, for the scalping, that's usually good for somebody who's low on the patience scale. If you have, you need to always be in a trade and you have several hours at a time to be trading, that's your best option, because then you can look at your charts and find something somewhere that has the potential for a good entry for a scalp. But all that being said, you still have to have the discipline to not take a bad trade, even if you want to, because if you keep taking bad trades, you're going to end up losing any profit you might make. So have some patience, have some discipline, and especially pay attention to your risk management. Never enter without a stop loss. Because stop loss will save the day if you make some bad choices. There's no hard and fast rule where if you have no patience, you have to, and lots of time you have to scalp, or if you have a lot of patience, lots of time you have to scalp. There's no formula where you put in the information and it spits out what kind of a strategy you need to use. It's up to you to look at yourself, look at your opportunities, look at what your situation is, and come up with a trading style that works for you and a commitment to use your risk management and a commitment to have discipline. So if things don't always add up, you have that structure where it helps you get through. Third T is technical analysis. So just do it. Not much point in trading if you're going to spend all your time thinking about what coin you want to get in, thinking about what you want to do or what style you want, especially with limited time. If you spend all your time and don't do any technical analysis, no charting, no looking for entries, then what are you doing? What's the point of you're not even a trader? So you realize that you have limited time and realize it's up to you to make the most of that time. It's like I said earlier, it's important to prioritize. And one of the priorities when you're trading on limited time is to take some of that time, be charting and doing technical analysis, so you have entries ready for when the time comes. So if you're scalping on a 15-minute time frame, if that was the system that you decided to go with, when you're doing the technical analysis, chart on the coins that the market gives you. Now, I know I mentioned earlier about limit the number of coins and tokens that you focus on and that you're looking at, and that's still important in scalping, to have your base coins, base pairs that you're keeping an eye on. But also, since you have a little extra time in your block, you want to take time to, if none of your charts give you a good setup for scalping, when you're ready. Nothing says that you have to say, oh, well, I guess I can't do anything today. Set those aside for the moment, then go looking at some other charts, other coins. Look at what's pumping and look at what's in the green and see if maybe you'll find a chart of something that has a ripe scalping setup that's going to hit any time potentially, whether it's horizontals or trend line breaks or something. One of these other coins might give you something at that moment. That doesn't mean that you're going to replace one of your set coins that you're focusing on with this one. But in this particular charting session, you might focus on this coin. You might scalp it, end up making a profit. And once that scalp is done and you're out of the trade, then you're done with that coin for now. Then you go back to either your ones you're watching or find another one. Then when your session's over, next time you come around, check your coins again. They might have something that now on this time where you can make some profit. If not, then find something that does. So basically, for scalping, chart the coins that the market gives you at that moment. Look for the imminent horizontal support resistance flips, trend line breaks. That's essentially what you're initially anyway, when you're beginning scalping, those are things that you're looking for, because those are the triggers that give you an entry, and then you go from there. Now, in the 1 hour time frame, if you're doing some day trading, both in the morning and the evening, when you have your free time, on your chart, you chart the potential setups that you see on the coins you're watching. Look at setups that you've already charted and see if anything is looking like it might potentially hit a trigger next little while you're still have some trading time. But that's where you want to spend some time getting potential setups on that 1 hour time frame, so that when the zone hits and the trigger happens, you're ready and know what you want to do with it. So yes, when you look at the existing charts that you've done to see if any of the setups that you have waiting appear to be imminent and just ready to hit. If not, go to other ones of your charts. Just make sure all your charts are up to date and keep an eye open for those potential setups. Now, if you're doing some swing trading on the higher time frames, it's important as I said earlier, when you have those random times, when you have times to do some trading and whatnot, it's important for you to do chart setups during that time and start setting up your charts. You might even take a moment, if you have some charts already set up during that time, you can look and see if anything looks like it's going to be of interest the next little while. Just make sure that you spend that time wisely, making sure that you have yourself set up so that when entries happen, you're ready and not sitting on the sidelines wondering what happened. So that's where you review those setups, check for entries, make new setups. Just have it fresh in your mind so that you're familiar with those charts. You have an idea where those setups are, so that you're not just guessing and you're not missing out when opportunities arise. That's also why it's important to focus on a limited number of coins. If you have 10 charts that you're focusing on and being successful with, and that's your day-to-day charting, it's a lot easier to remember those charts, to recognize those charts, to know how those particular coins behave. Every coin has its own personality and reacts differently in the market. And when things repeat, there's different patterns. So if you have a limited number of coins that you're focusing on every day, in your mind, you're going to recognize when patterns happen in those coins recognize when setups. Oh, this setup happened there a few weeks back and it was successful. Now it looks like it's happening again. It's easier to recognize those things than if you're just randomly picking coins every day, or you're trying to watch 100 different coins. You don't have the same intimate knowledge of that particular chart. Number 4, I think I'm on 4, is TradingView alerts. You need to stay alert, especially when you have limited time. It's important that you use TradingView alerts. In my opinion, it's arguably the most important tool for trading when you have limited time is those TradingView alerts. Because they're your eyes and ears when you're not in front of a computer screen or in front of a chart. They're watching your charts that you have set up, and they are watching what you feel is important, and they're ready to let you know when something you think is important is about to happen. So you get an alert, and you go look at your chart, and then you can decide what to do with that setup. Another important use of alerts is when you're leverage trading. When you're spot trading and you're buying for investment, 1x, it is not so important not to use limit orders. You might have a setup where price is heading down towards a Fibonacci level, a 618, let's say, and that around that time it looks like you're going to have a reset of your RSIs, and you may have 2 or 3 of your triggers might hit at that point in your mind's eye, but it hasn't happened yet. And when it looks like it might happen, you're not going to be available. You're not going to be in front of your computer screen. So what you are going to do is set up your chart, and you're going to have an alert set. Let's say at that 618. Like I said, with a spot, it's not so important. You can always set a limit order at that 618, have a decent stop loss. So if it hits that level and bounces off, great, you're in the trade. If it doesn't bounce off and it keeps going down, you'll get stopped out. You're using proper risk management. It'll be no harm, no foul. But if you're into leverage trading, what you need to do is watch out for liquidation, especially if you're somebody who likes using larger leverage trading. With spot trading, if the price can keep going down, 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 and you're still in the trade until it goes to zero. It might not be pleasant. It might not be nice. You're going to lose money, but you're not stopped out unless you have set the stop loss. You're not forced out of the trade. Not same with leverage. The higher the leverage, the lower your liquidation window is going to be. So then, you might have what's an acceptable stop loss for a spot trade. Suddenly you're on 5x leverage. That stop loss is going to lose you 5 times as much money. So if it's something that you think potentially may happen, like that bounce off of 618 I mentioned, try using an alert instead of a limit order. So set the alert where you would normally do your limit order. Then when the alert hits, you can look at the chart, see where the price is going, and maybe watch it for a bit, whatever you have to do. But you can then, at least at that point, make the decision that you want to enter the trade or not. Maybe the RSI hasn't fully reset like you'd hoped it would, so it's not quite the time you're comfortable getting in. You have that opportunity to decide for yourself without waking up in the morning, having a limit order that hit on 5 times leverage, and you get stopped out. So be tempted to use alerts more so than limit orders when you're leverage trading. You want to avoid a gazillion alerts, maybe 2 or 3 key alerts per pair, because it's easy for you to get overwhelmed with the amount of alerts. So if you set too many, that's going to be more of a hindrance than a help. So pick a couple of key alerts, a couple of horizontal, maybe a couple of horizontal levels that you want to keep an eye on, maybe a trend line diagonal or something along those lines. Even just an alert on your RSI resetting and crossing back up. Make sure that you don't overwhelm yourself with alerts. Most importantly, don't ignore your alerts. I've been guilty of that. You have you set too many alerts. It seems like they're going off all the time. And the more they go off, the more your mind gets conditioned to ignore it. Like, oh, well, I'll check it later. So you ignore it, and maybe one of those alerts was a really great entry where you could have made a good entry and made good profit, but you ignored it. So again, that's why it's important not to have too many alerts, just enough to give you some key levels so that when those alerts do go off, they're important. You know they're important, and you're going to look at the chart and see if you are ready for an entry. It's like people even almost, if somebody's a chatterbox who just talks nonsense all the time and won't shut up, over time you tend to ignore them and don't listen to what they say. But if somebody is silent, a thinker, and they don't talk a lot, but when they do, it's something that's important, you're likely to listen to them when they talk. Whatever they say, you're listening because you figure it's important. So don't let your trading view charts be the gabber who makes you ignore them. And you also want to set your alerts strategically. So, like I said, if you're setting an alert on a 618 line, for example, don't set the alert right on the line, because maybe it's going to bounce right on the line, and you get the alert. By the time you open up your chart and look and decide what you want to do, it's already bounced, and you might still get a good entry, but not necessarily the best entry that you could have had. So set your alert a little before it hits that point. So, set your horizontal alert a little bit above that 618 line. So then when the price gets down near that level, and probably going to be hitting your level, you get the alert ahead of time. You get your chart open, you can look at it, and then you can watch it and decide what to do when the time comes for an entry. You might not catch it right on the bounce if it's a quick one, but you could probably catch it better than if you wait until it's already bounced. So be strategic in your alerts. Even with a diagonal trend line, you might set up your trend line on the price peak, but when you want to use an alert on that trend line, move the trend line a little bit down so that the price will hit it and trigger the alert before the trend line actually is. The fifth key is trading groups. Work smarter, not harder. If you have limited time to trade, then a group can help you cover more ground. You have 10 coins that you're watching and charting. You have a group of maybe 4 people, and they're each charting 10 coins. That's 40 coins that are being charted within your group. And, you see something that's imminent or coming up, you can, hey guys, look at this. You might want to take a look at this and see if it's something you're interested in. And somebody else might do the same thing. They might say, hey, look at this. Here's this trend is about to break. Take a look. Maybe get a good entry. So it saves from you having to focus on all of those charts. You can focus on yours, and your group can help you cover more ground. Now your group should be small as well. If it's too big of a group, it's like anything. If you have too many people, often cliques will form. You have to remember that this group is your clique. You all need to be close enough to be able to communicate and get along, enjoy each other's company. It's not all about trading. It's also about personalities. You need to become friends. You need to mesh. You need to be able to enjoy the time you're spending trading together. So keep it small, whatever you think might be best for you. You know, whether it's 5 people, 6, 7, maybe only 2 or 3 or 4. But you should have a group, because it also helps keep you on the straight and narrow, and you can bounce ideas off of them. Now, the people in the group, their trading styles can differ, but they should complement each other. You know, somebody might be a scalper, somebody might be a swing trader, somebody might do day trading. You know, but those are all complementary to each other. You know, if somebody has a swing trade that's been brewing for a few days and it's potentially going to hit a trigger, you know, if somebody is a scalper or a day trader, they can still take that information because it's ready to, it's already percolated and ready to do something. So those can complement each other, those trading styles, as opposed to, let's say, somebody who's more of a gambler, where they're always using high leverage. They're making entries before they should, really gambling their money away. And they're they might win 10 trades and make a lot of money, but their style of trading makes them probably lose the next 10 and lose it big because there's always leverage involved. Somebody with that trading style doesn't really complement someone who is a disciplined trader who is looking for people to help them be a better trader. So that's make sure the people that you're with are people who complement you. Like I said, you're sharing the work of analysis and more monitoring. The group can cover more things more efficiently than one person can. So it's really, that's the secret sauce to a group, to a trading group, is being more efficient so everybody can make it. So you have to be supportive. So within your group, have a "we're all going to make it" attitude, where you strive to help everyone be successful. You know, maybe everybody has bad days. Maybe one of your trading partners is making bad trades for whatever reason. You know, you can talk to them and say, "Hey, you know, I noticed that you're not being so careful about your entries. You know, some way I can help you. Is something you maybe bothering you? Can I help you with some trade setup you're struggling with?" You know, be supportive so that it's not a competition. It's a team where you all want to be successful together. Was it they say a rising tide rises all boats? So, you know, be helpful. Everybody should be able to succeed within your group, as far as they accept your help. But, you know, if you see somebody struggling, help them. Don't just ignore them. Don't just say, "Well, sucks to be them." They're your teammate. Be supportive. And deal with toxicity immediately. Don't let it fester and poison the group. You know, if there's somebody that's always being nasty, somebody who's, you know, if one member of the team says, "Hey, here's this setup. Look at this setup I put together. What do you think?" If another person, if it's really critical about it, and, "What are you, an idiot? That's no way to trade. That's bad. That's wrong. I could do it better this way or that way." Being very critical and not helpful, you know, that's not the kind of person that you want in your group. You want somebody to be supportive. Yes, it's okay to be critical, as far as, you know, if you're noticing stuff that maybe they should be doing differently that you could help them with. But don't be critical just for the sake of being critical. Don't be one of these people that thinks they're the most important person in the group, that everything revolves around them. That person isn't looking for a group. They're looking for followers. So if you end up in a group and there's someone like that, either get them out of the group, or if you have to, you leave the group. I realize that it's not always up to you. Maybe it's a group that you joined. Whatever it is, you don't need that in your life, especially when you have limited time, because all that will do will eat into your time and waste your time trying to deal with it. You work smarter, not harder. So in summary, want to pull it all together. We want to trim the fat. We want to make sure that we have a small enough amount of trading charts that we're watching that we can focus on them. We don't need excess. Trim that fat. Time frame. Pick the time frame that works for you. You know your time availability. You know all these things. You know yourself. Be honest with yourself and make that choice of what kind of time frame will work for you. Because you want to be successful. That's the main thing. Do your technical analysis. Like I mentioned earlier, if you spend all your time doing everything but charting, you're not going to do anything. You're not going to be successful because you're not going to be in any trades. So make sure during that time to prioritize some of your free time for the charting and technical analysis. You have setups that will allow you to enter profitable trades. Use those trading view alerts because you're not in front of the screen all day long. So let those alerts be your eyes and ears. And if you set them properly, they will be good at giving you opportunities to make good entries. Find a trading group. There's nothing worse than trying to trade by yourself. Sure, most people trade by themselves as far as, doing your charting yourself and spending what time you have in front of the screen doing it by yourself. But it's important to have other people that you can bounce ideas off, other people that can give you suggestions, other people that can let you know things that are going on you might have missed, people that you can get together with. Sure, you might get together with them and have charting sessions, but there's nothing worse than being an individual trying to trade. You get in your own head if you have nobody to talk to, nobody to bounce ideas off, nobody to get other ideas from. You stagnate and you become bitter, and eventually you probably lose money and end up quitting. So get a trading group. Even start with finding one person that is of like mind that you can get along with and get together with. Make the most of the time you have. Nobody knows what will work for you better than you. So the most important takeaway is that you know what your life's like. You know what you can do and what you can't. You know what opportunities you have to find time to do trading. So it's only you can decide what's best, what kind of trading you want to do. Don't let anybody try to convince you that, you need to do this, you need to do that. If you feel that it's not the best in your best interest, if you feel that it's not the best thing for you, don't do it. Only you are responsible for yourself. So that was my thoughts on what to do when you have limited time. I'm still working on putting together my trading styles. I don't claim to know everything. I'm not the world's best trader, but I know that the time that I have available, that I tend to work towards doing what I can to be successful and to be a positive influence in my group. I try to be making the right choices when it comes to risk management. And I also try to, when I make a mistake or when I know that I am maybe rushing an entry, I know that I have a stop loss to back me up so that I can come back to reality and my next trade will hopefully be a better opportunity. I just have a few minutes. I can show you what I mean here about the I'll show you what I mean by about your limits or your not your limits, your alerts. Screen's not sharing. Yeah. For some reason it doesn't like that. It didn't like me sharing my TradingView app. Let me try putting it in a window. Share screen. Like that either. figure out why my screen's not sharing, I would bring up a chart, but I don't. I have an issue here trying to get a chart up. Hello.
Hello. How are you, my friend?
Good. How are you?
No, great. Your presentation was awesome, as usual.
Thank you.
That's okay.
I thought maybe at the end I was in the wrong area. I didn't see anybody else.
Oh no. But no. We were waiting, but
yeah.
It took a bit of time for us to be brought up, but never mind. Beth is on her way, I suppose. Can you hear me correctly?
I can hear you fine, yeah.
Okay, good.
What are you guys going to be talking about? Hi, Beth.
Oh,
hi.
Yes. Hi. Well, we'll be talking about digital cash and wallet security.
That's always important.
Yeah, especially with all these airdrop things, you know.
Mm-hmm.
Yes.
They're all over social media, and it's engagement farming, really, where, you know, all these influencers announce wonderful thousands of dollars that, you know,
all right, I'll let you guys get to it.
It's important to know how to protect your funds and, you know, all this. Yeah. So that's what we're doing tonight.
All right, sounds good. Have a good presentation. I'm gonna get off now. Bye.
Okay. Great job. Thank you very much. Thanks. Bye-bye. Okay. Right. Shall I share my screen, Beth?
Yes, unless David has your presentation, you can share it. That'd be great.
Okay.
On the bottom, it says present.
Tell me if you can see it.
It's coming. Yeah.
It's coming. Yeah, good. Okay. Obviously I'm the one to, you know, I'm going to manage the slides and everything. So because you're starting, well, feel free to tell me when to click to bring the next slide you need, right?
No, sure. I mean, I was going over what we are going to discuss. Your contents are great. I'll just go really quickly. Obviously, the on-ramps and off-ramps. A lot of people in the United States, unfortunately, we don't have the freedom that some of you that live around the world do. How to choose your own on-ramp and off-ramp securely and safely. A very important topic, how to move your crypto. How do you cash out your crypto if you want to take profit and actually put it back into your bank? And then finally, wallet security, which I think is extremely important. And we can go on to the next slide.
Okay, go. Is it working? No. Sorry.
No, it's okay.
Okay, here you go.
No, of course. So I think a lot of people got into cryptocurrency because of Bitcoin, right? Like, I got back into Bitcoin in 2015. I saw the session earlier, lost a lot of my Bitcoin leaving it on exchanges. But what is Satoshi's vision? We don't know what Satoshi is. I have some ideas and guesses, but I'm probably wrong. But decentralization, you owning your own money, not having a middleman, For example, when you go to a bank and you have to wait 3 days for your check to cash or for, to get your money out or it's a weekend, digital cash, using it for transactions, like I know like in El Salvador, you can actually pay for things in Bitcoin, which to me is priceless. Anonymity, being anonymous, like some people don't want you to know how much money that you have.
I'm so sorry. I'm so sorry. I'm sorry. I made a mistake on my keyboard.
No, it's okay. Hey, it's okay. I knew the other three by heart, but I just want to make it's fine. Obviously, security, transparency. It's decentralized. It's on a ledger, almost like writing things down, but electronically, that can be read by anybody. But you have to have, specific access to that, and it's very difficult to hack or break and get into Bitcoin. Even though I'm not saying it can't be done. Obviously, inflation. I mean, look at how hard is it to move gold? Look at how much it costs to buy gas. Houses are these days. 21 million Bitcoins. That's it. It's very scarce, and if you have Bitcoin, in a way, you're preventing inflation. And finally, like financial inclusion, it provides access for people in Africa and countries that have no way of actually going to a bank or providing identity. So it's a new invention, not really a new invention. It's been around since I think in 2011, 2009. I would have to go back and look to be accurate, but it is changing the world. And if you have anything, consider yourself blessed. And you're not too late. I keep hearing that every day, and this is not financial advice, but I buy Bitcoin every 2 weeks, just $25 to $50 it. I don't look at it. I just buy it. And then I look at certain levels and then I still have the levels. But yes, we can go on to the next.
Okay. I'm sorry, Beth, but my connection isn't that good.
No worries.
Sometimes I don't hear you very clearly, so don't hesitate to repeat when you need the next slide. Okay, here you go.
Yes. Hopefully you guys can hear me better. I'm just going to change my mic settings for one moment. I can put my headset on as well, but it seems to work better this way. Okay, there we go.
Okay.
Okay. So off-ramp, on-ramps. What are they? Right. Do you want to go over this, or would you like me to go over it? I'll just go over it. I'll do it. So the on-ramps, think of those as entry points into the cryptocurrency space. Platforms that the government actually can regulate, especially in the United States, but they will in Europe, US, United States. When you want to use Bitcoin onto the on-ramp, think of it as a way to get your cash into the cryptocurrency space. So the off-ramps are going to work in reverse. They are going to let you sell your cryptocurrency and actually put it back into fiat wherever you live around the world. So essentially, they are your entry and your exit points. You don't necessarily want to keep it on there for a long time, especially if it is, when we're going to discuss this, a hot storage wallet. But that hopefully is understandable, and I will keep monitoring the chat. If you have any questions, let me know. And if my sound is not any better, let me know. The microphone says it looks good, but just let me know. We can go on to the next slide. I think this is you.
Yeah, this is me. Okay. Tell me if you can hear me clearly. And yes. If yes, okay, we're good. So obviously, the main problem when you start in crypto is to understand how you can safely onboard your fiat onto an exchange, for example, to buy your favorite cryptocurrencies. So there are many different ways now that, and it was not the case at the very beginning of Bitcoin's life and everything. At the time, it was extremely complicated, and a lot of people couldn't on-ramp at all. But now you have many different solutions that you can choose. So mostly there are 4 different on-ramps that you can use, and I'm going to try and explain what the difference between them. So first of all, you have the centralized exchanges that you probably know, like Coinbase, KuCoin, Kraken, Crypto.com, Binance, and that sort of thing. And then you have peer-to-peer exchanges such as Paxful, Bybit, or OKX. And you have also what is called payment gateways or ATMs. Namely, the Transact, Coinify, Swapin, Indocoin, MoonPay, Wire, SwiftX, CoinSpot, Luno. Right. And the last ones are crypto brokers, eToro, Interactive Brokers, or Swissquote. But once you know that, you might find it tricky though, because none of them are necessarily accessible for everyone around the world. It depends on your local government and the regulations in your local area. So a lot of people in our community find it difficult to find the perfect crypto exchange for them, because, for example, as you probably know that, but in the USA, it is particularly difficult to on-ramp, and there are a lot of exchanges that you can't actually use. So on the table that you can see on the screen, in the USA, you can on-ramp through Binance US, Coinbase, CoinW, Crypto.com app, Kraken, or Mexi. Oh, by the way, this information comes straight from the moderators at Crypto School, who were kind enough, to tell us what they used, so that that it can be definitely used because somebody has tried it before, right? For Europe and the UK, for example, you can use, quite a long list of exchanges, which is on your screen. The only exchange, for example, that you won't find for France and the UK is Bybit, because, as I told you before, there are local or national regulations that sometimes prevent you to use such and such exchange for, yes, regulatory reasons. So in Europe, you can on-ramp via Binance, Bitgate, Coinbase, Crypto.com, and all this, except for example, Bybit and maybe some others, which I don't know yet, but because the regulators have decided that Bybit, to be precise, did not comply with the KYC regulations, and then they're not allowed to serve British or French customers, for example. If you are from Australia or South Africa, or a country that allows you you can use all exchanges. And if you are in the Asian area, then you can use all this wonderful list, and and it's easy for you. So really make sure that in your local area and your government allows you to use your favorite platform. If it's not the case, try and find one that fits your specific needs. We know it's very complicated, and also and also in the Discord, we have an awesome community with lots of absolutely lovely mods and students who are very ready to help each one of you, but they don't necessarily have the correct information in your particular case. So be very careful and check by yourself. That's important. So except for exchanges, you can on-ramp via a lot of other payment service providers, which I mentioned earlier, 𝗪𝗪𝗏, 𝗂𝘀𝗧, and all this. But in that particular case, you will have to be very careful, and you will have to check the factors that are on your screen, because it really makes a difference. And the service may be, well, absolutely awesome, or it can be a little bit difficult, right? So before sending any funds to via a payment service or gateway terminal, please review the following. First, the availability of this payment service in your local area, because as for crypto exchanges, although there is a lot of these services available worldwide, it really depends on your local area and also on your local regulations. So check this. Check the transaction fees as well, because from one payment service to another, they can be very different, and it could weigh a lot on your, final bill. Check the transaction speed, because of course it varies as well. Check on the payment methods, because some of them will allow you, for example, to use your credit cards, but some others won't. And of course, you need to know that before you send any funds. Check the supported fiat, which also may be a problem. For example, you can be attracted to a particular payment service because it's very trendy, and all your friends abroad talk to you about the extraordinary service, but maybe this particular payment service doesn't support your own fiat, right? So you have to check that. Check also which cryptocurrencies are supported. I will give you an example. If you, for example, you have a bag of, let's say, 𝗂𝗏. Well, I love that coin anyway. And you want to convert your 𝗂𝗏 into I don't know, dollars or euros. If you choose a payment service that does not support 𝗂𝗏, then don't send your 𝗂𝗏, right? And convert
exactly. And the chain too. Make sure it's the right chain, the different blockchains, and we'll go over that.
Absolutely. Also check the user experience. Google, make a quick Google search and see what people say about the service provider that you've picked. Check on their security, measures, to protect their network against hacks and things like that. Check their reputation and also the customer support in case something will happen. It's always a good idea to make sure that you have somebody on the other side that can help you, if you get into trouble for some reason. All right.
Absolutely. In fact, I know somebody that literally was trying to move money on Coinbase yesterday, and because of the amount, they literally stopped him. Like, it's not going to go through until the 25th. And he was very aggravated because he wanted to get in and to catch the dip, right? So it can be tricky. Especially.
And that's why we have such an amazing community here, because
exactly.
Whatever happens, you will always find someone to help you, or and give you good advice and all this. So right, anyway, take your time and don't rush things. so that you have the time to think
100%.
about it, and all
Yes, this is money, you guys. This is what you work so hard for every day. And we can kind of review what the next slide says, like, why are they collecting this information? Well, they need to verify that you are you, right? You're going to have to show either your ID, your passport. This is when you're on-ramping, right? You have to have a home address. Like if you're in the US, you have to have a US address, a valid phone number. Obviously, sometimes they may even ask you for your employment information, or like I remember Coinbase, when I got hacked, they asked me for like an electric bill that had my actual address on it, things like that. Just making number information, because listen, they're collecting your information for taxes. And that's a whole nother topic that hopefully on the next marathon, I have a great cryptocurrency tax expert that will hopefully come on for us. Other data, and for those that don't know what KYC means, it means know your customer. This is another thing, routines, they check for this. History of timeframes, history of what you've used, history of like if you have bad credit, like have you tried to withdraw in other exchanges that and didn't have the money, things like that. Any trades or anything done related to public blockchains, they can look for all of this technical information about the devices where you're logging in from. I highly, I can't say this enough, recommend, and I know we'll talk about this in detail later, a VPN, virtual private network. I use it everywhere I go, on every device I have. But for example, if I'm on Coinbase and I put my VPN to Australia, it's not letting me in. So just be aware of that. But they can really get everything. Can they get your IP address? Yes. Can they get your phone number? Yes. Can they see where you are? Can they see where your laptop is? Yes. And believe it or not, we don't know if they can see even with a VPN. Just do everything as, if you have any questions, just please reach out to us in Discord. We're there 24/7 and we will help you. We can go on to the next slide.
Okay. Choosing. This will be quick, actually, Beth, but here you go. The key factors, right?
Yeah, go for it.
All right. So as I said earlier, check the transaction fees, the transaction speeds, the ease of use, the security and reliability of their network, the supported cryptocurrencies and fiat currencies, and customer support and reputation. Right. Now, about the payment methods that you can be using if, it fits your needs, of course. So you can use your debit or credit card, but it is not recommended because, obviously you give away a lot of personal information. But if you don't have any other choice, then use a VPN to protect your personal information and your banking information. The international transfer system, which is called SWIFT, and which you probably know, is an international payment system that connects millions of banks around the world. So if you want to transfer money for long distances and there's no contact between the sender and receiver bank, then SWIFT acts as an intermediary sort of thing. If you want to deposit dollars, euro, or pounds, British pounds, using the SWIFT transfer, you just need to make sure that your bank is connected to the system. But be aware, though, that transferring money through SWIFT is quite expensive compared to other methods of transfer that maybe could be worth checking into if that's possible for you. You have also the possibility of using what's called domestic transfer. So it doesn't have the same name in all the geographical areas around the world. For example, SEPA in Europe, ACH in the US and Australia, if I'm not mistaken, and in other places in the world, it's called faster payments or something like this. But anyway, it's a lot cheaper, and it could be very useful too. Okay, and oh, sorry, and oh my God, all right.
You're good. One more word. You're good. Right there.
Now, well, technology has evolved a lot, and also big institutions or big brands have made everything possible for their customers to be able to buy cryptocurrencies. So now you can access cryptocurrencies via Apple Pay, Google Pay, Samsung Pay, or Crypto.com Pay, for example. So that's very useful, but it goes with a few things that you need to check before you can make any move. Actually, so for example, I don't have an Apple phone, right? So I had to research it a little bit. I have an Android phone. That's one. So for me, it's easy, but I don't know much about Apple. But what I learned going through this is that to be eligible to buy cryptocurrency via Apple Pay, I found this on the Coinbase exchange support section, right? Users need to have a compatible iOS device. Well, obviously, right? You have to download the mobile wallet app on your phone, and then you have to have a locally issued Visa, MasterCard, or Maestro card that has been provisioned to Apple Pay. So it works the same for Google Pay and Samsung Pay.
And there are some issues, just be aware, because I went to buy some USDT with my Apple Pay with Crypto.com today. It didn't matter where I put my VPN, it wasn't letting me. So unfortunately, I mean, I have that linked to my bank because it's one of my on and off ramps, but their fees for me are a little bit high. But, you know, we do what we have to do, right? We do what we have to do, and we make sure we're doing it safely. But yeah, great point.
And it just, sorry, it's exactly the last point I wanted to cover. In fact, if you live in a country where the service is covered by the exchange, legally speaking, you're fine. But I'm afraid it's not possible for everyone yet. So
yeah, fingers crossed it gets better.
Yeah, so please go to the exchange, research their support documents, and make sure that your country allows you to on-ramp via Apple Pay, Google Pay, or whatever you choose, because they have a huge list of countries that can access this service. And of course, all the other countries which are not mentioned in the list are not actually eligible for now.
Nope. I used to use Bybit all the time. Now I can't until I get my Paleo ID. That's a whole nother topic. We'll talk about that later for next time.
Yes. So really, you need to be very careful, and you need to do a lot.
And they're watching. The government's watching. At least I know in the United States, they're watching everything we do.
Yeah. So, right. So this is Beth's part.
So I have become the expert of moving crypto in and out of wallets, different chains, different networks, different blockchains. And this is very serious because I have done this. If you're new to crypto, you have to verify your address, verify the chain that you're using 2 or 3 times. You can go on to the next slide. I've been into crypto now since 2017. There are lots of ways that you can check and verify, but you can actually view your blockchain transactions. And most of you may or may not know. Go ahead. Did you have a question?
I'm sorry, Beth. Missed one.
Go back one more. So sorry.
No.
One more. It's okay.
That's the one. Yeah, that's the one. Sorry.
Yes. So different blockchains have different. There's going to be USDT on Solana. There's SolScan. Then there's EtherScan. So you guys have a way of logging in and checking that. So to send your funds from the wallet, if we have time, I'm going to actually show you some. I'm going to show this to you at the end. If we have time, you're going to have each address. For example, every token in your wallet is going to have an assigned address. So let's just say you want to move USDT from Coinbase to 𝗪𝗧. So you would obviously go to the application that you want to move it from. So you're going to go to Coinbase and say, ooh, this is where I am taking it, but I want to put it into 𝗪𝗧. So then you have to validate that your USDT 𝗪𝗧 receiving address is what you're using. And then you're going to send it from Coinbase on USDT to 𝗪𝗧 at that receiving address. You can scan a QR code, which makes it a lot easier. However, if you do this, if you send USDT by mistake to a USDC address, you cannot get it back. I think we've all done this in crypto. I can't even tell you how many times I have done this. So if we have time, I do want to show you guys. And do note this, like your Bitcoin and Bitcoin Cash address will change every time you do it, but your wallet address will stay the same. So every time you guys, every single time you are going to move a transaction, check the wallet address. Like I usually check the last 5 digits, and then in my exchanges that I use prevalently, I save the address. I'll say 𝗪𝗧 USDT Coinbase ETH SOL network, whatever I want, whatever network, and we'll show you. If we have time, I really want to show you guys. We can go to the next slide.
Yep.
If you guys have any questions, please feel free and ask in. I am watching in the Discord. So again, what is your home screen going to show you? It's going to show you your recent transactions. Again, if we have time, I could possibly log into one of mine and show you, but it's going to show you all your past orders. I write everything down, especially if I'm using a DEX. And I know Matt and I are doing a presentation on DEXs around midnight my time tonight. But you can find everything on there, right? So you can find it on your exchange and on that blockchain. So either Etherscan, SolScan, there's many more. But don't worry if you can't find it. As long as you have done it, there's a record of it. Once it's on the blockchain and that hash has been created, you're good as long as you have the right coin going to the same coin address on your other exchange and vice versa. We can keep going.
Okay.
Does my sound better? Yes?
Yes, it's great.
Okay, yeah, I put headphones on. I was logged in like 3 times. I apologize for that. So why would you want to log in with your ID, and how do you do it? So the first thing that you would do is obviously you would go to Etherscan, and we're going to show you the address so you guys can write the address down. Have your wallet ID. Make sure you have a password, and always 2FA, two-factor authentication. So I use Google Auth. I think it works pretty well for me. You're going to see a random string of numbers. You start 0 something. Sometimes they're random. And whatever you do, if you're using a phone, don't keep it on your phone. Like you can, like I've even texted my own, for example, I'm moving osmosis to a 𝗓𝗄𝗧 wallet. I will copy that, text to myself and immediately delete it. And I probably shouldn't even do that. I haven't done that in a while. I've been using QR codes. But again, your wallet ID, the numbers are going to look very similar. So check the addresses and your balance. You guys always have the ability to check your balance. It's going to appear at the top of your wallet, at every wallet. Now remember, there's spot and then there's futures, right? There's perp trades on most of your exchanges that you're using. So you may go into, hey, well, I put $100 in here. Oh my God, it's gone. I can't find it. Freaking out. Just to find out that it's really there. But for example, when I put money into 𝗪𝗧 from Coinbase, it goes right into futures. And I'm primarily doing a lot of spot trades right now, setting limits. So I have to go, and you have the capability of moving, from your crypto from your futures to spot and vice versa. And we can keep going. I'm checking to see if we have any questions. Oh yeah, and always do it. This has been a very, 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 very good point. Always do a test first. Always. Like for example, even yesterday, one of my friends that is a coach in the National Football League was moving some money. He had a question for myself, and we, pretty much, he was moving money on the Mat exchange because on Coinbase it was free. So there's the address. So you can log in, take a picture of that, write that down. I have an Etherscan account. I have a SolScan account. That way you can go back, and if you have any doubt or you don't see your transactions on your exchange or your you know, your cold wallet, if you're moving it to like a Ledger or Tangent, Trezor, or whatever you're using. Very important. There's also SoulScan as well. The Solana network is very fast. I literally moved last night. I moved a little bit of Solana. It took 10 seconds. 10 seconds. I was like, oh my God, that's great. Yeah, it was fantastic. But make sure you're doing a test run first. Like always send like $2, $5. And remember, there may be or may not be fees depending on what exchange you're using. We can go on.
Okay, so well now the important essential part of your journey in crypto, wallet security, how to protect your funds at all costs. So here we go. Right, so maybe if you're new to the crypto space, maybe you feel overwhelmed by all the different terminology that, you know, you find everywhere. People talking about cold wallets, hot wallets, and all these kind of things. But, well, a wallet, what is it? So basically, a wallet is a combination of a public address and a private key. And in the general classification of wallets, there are three major types of crypto wallets, which are hardware, software, and paper wallets. And that's where things can get a little bit complicated for somebody who's never been in crypto before. And these wallets are based on their method and location of storage. They can further be classified as cold or hot wallets, right? So let's try and see the difference between all this. So the hot and cold wallets. Hot wallets are basically connected to the internet, and thus they're less secure. They're user-friendly, so they're easy to set up. The funds can be accessed easily, so they're more likely to be used for daily transactions, and they are globally perfect tool to store a small amount of your overall capital. Never store everything on them. If you have, well, the vast majority of your capital should be stored on cold wallets. So what's a cold wallet? A cold wallet is a device, okay, which enables you to store safely your recovery phrase offline. They don't require internet connectivity, and of course, the security is improved, and then they are safer, right? An important thing to understand is that the cold wallet stores your private keys and your public address, but not the coins. The coins stay on the blockchain. That's important to understand. And on these cold wallets, not on these cold wallets, but through these cold wallets, you can store more substantial sums of money, and you can store them very safely this way, because nobody except you can access your funds, and they are hack resistant, so they are more suitable for long-term holdings, right? So if you have a lot of bitcoins, so Bitcoin store them there. So the hardware wallets are then hardware devices that individually handle public addresses and keys and private keys, as I told you. There are two different kinds of hardware wallets actually that you can actually buy to secure your funds. The most popular are the Ledger Nano X and Trezor. The Nano X is my favorite one, because there's another one.
I'll grab one while you're talking about it, because I have them. So
yeah, which is called S, Ledger Nano S, but you can't store many different cryptocurrencies on this one. So I had an S, and I of course upgraded to an X because I wanted be able to store all my favorite crypto.
Can you guys see the ledger? This is what it looks like, a little thumb drive. Can you see
Yeah,
it?
yeah, I've got one here. Maybe I can show you.
But I'm going to use what you're going to talk about next. I think is better and a lot easier to use. What you're talking about right now.
Exactly, exactly. So anyway, if wait, where is my ledger? I'm trying to find it, but of course, oh, here it is.
Yay!
I'll show you. Can you see it?
Yep. Ledger,
right.
ledger.
Okay.
Ledger.
Yeah.
And make sure you guys write down your seed phrases. Don't put them on your computer or a phone. Write them down.
Exactly. Exactly. So as you can see, they look like a USB, right? With an OLED screen, and they have either side buttons or buttons here at the top. They are batteryless devices, and they can be connected to PC and accessed via a native desktop app. In the case of Ledger, it's called Ledger Live. They cost about between $70 and $100, and well, obviously they offer a reasonable amount of control, but they are quite complicated for beginners to use.
They are. If you got locked out, and I got locked out of mine, you have to have your seed phrases. And one of our other mods. Thank you, Matt.
So
that's why what you're going to talk about next, which I have right in my hand.
Exactly. Now they have a competitor, and it's called the @𝗏𝗏 wallet. So the 𝗏𝗏 wallet is obviously uniquely safe, right? Because the wallet, it contains up to 3 cards, which are as slim as bank cards. And during the activation process, the cards embedded chips generate a random private key, ensuring that the wallet cannot be compromised. And then the cards connect with each other and transfer your encrypted private keys from one to the other. And the cards are used to unlock your 𝗏𝗏 wallet app on your phone. So you tap your card on your phone like this, and of course you have installed the 𝗏𝗏 wallet app on your phone, and then you can unlock it like this.
Easy.
It's very easy. The cost is very reasonable, really. It's between 55, well, roughly, it's 44.90, I think, for a 2-card set.
For 2,
and yes, about $70 for a 3-card set, but really it's absolutely awesome, right? Sorry, oh my god, it's my mouse. Anyway,
that's okay.
The other kinds of wallets that you can find are mobile or web wallets, which individually handle your public addresses and keys and things, all this, but they're vulnerable to malware, viruses, or hacks. So they are a solution, but sometimes
one of the students wants to see what the 𝗏𝗏 looks like again. So literally, it just looks like a credit card. It looks like a credit card, and all I do is tap my phone. Tap it, and then you have a password. You don't have to write down seed phrases, and then I give the other person to somebody that I highly trust. I have 3, so yeah, I actually got 2 sets, but you only need 1, and they store a lot. You can store a lot of tokens on one. To our ledger, different sizes. Sometimes they run out of storage. That's why I had 2 and had problems. So, I mean, I don't work for 𝗏𝗏. I don't get paid by 𝗏𝗏 or anything. I just think it's a very viable, easy, cost-effective solution, especially if you're a new student. Great job.
Okay. Sorry, I can't see you actually. I probably messed up a bit with my display, but anyway, never mind. So you have what is called a web wallet. Well, typically it's like a MetaMask or Coinbase wallet or 𝗏𝗏 wallet or 𝗏𝗏 wallet, or these wallets, right? So they can be accessed by internet browsers, and usually you you add an extension to your wallet for your wallets to be easily accessible when you browse the internet and connect to the dApps and all this. The private keys are held in some web wallets, but are prone to hacks and things. So, of course, you don't store much on these wallets. You store what you need to spend, but nothing more really. They can be hosted. They can be hosted as on exchanges, for example, or they can be non-hosted. The non-hosted one are the ones that you pinned on your browser, and you've got full control for those. But then they're the least secure ones. So of course they're ideal for daily transactions, but it's better to store little because they're more suitable for small investments, right? So you have to be careful not to store too much on these. The mobile wallets are just like web wallets, but for your smartphone. They're convenient because they use QR codes for transactions, and they're suitable as well for daily operations. But, well, as their counterpart in your browser, obviously they are vulnerable to malware, viruses, and things like this. So you have to be careful. They need to be encrypted, but overall they're rather practical, and then of course you can use them on the go, so that's why people like them very much.
Yep,
I do too, actually, but I don't put much on them. Then the desktop wallet, that's something else, right? But it's installable software packs which are available for operating systems, and they're quite interesting. That's quite an interesting solution, actually, but they require that you have an up-to-date antivirus installed on your computer, right? Because of course they connect to the internet, so to be sure that there is no security breach, you need to be well protected, and they are the third most secure way to store your cryptocurrencies, and they're also one of the best methods for cold storage in a completely clean system. They're easy to use, they give privacy and anonymity, and they involve no third party, which is a very good thing, because then you are in full control of everything, and but you need to regularly back up your computer, to make sure that you don't lose anything. And the popular desktop wallets that you can find are, for example, because of course there are a lot of new solutions that come up every day, but the most popular are Exodus, Bitcoin Core, or Electrum. And the very last kind of wallet I wanted to talk to you, but it's very obsolete, so it will take a second. It's what's called a paper wallet. They are physically printed QR-coded form wallets. Some of these wallets allow downloading the code to generate new addresses offline. They are not prone to hacks, but they have a major flaw, which is not being able to send partial funds, and they can't be reused. So there are much more better solutions now that,
Yes, and for those that are in the audience, just out of curiosity, one of our other mods just gave me a very interesting fact. If you're listening and you're in the chat, how much do you think has been lost from people moving Bitcoin? There's 21 million Bitcoins, right? Just how many do you think has been lost forever on the blockchain? Like what percent of the total supply of Bitcoin? So pop in the YouTube chat. I want to see who guesses right. Who guesses the closest? Let's see who's going to be right. You can keep going, but this fact would blow your mind. It will blow your mind.
Okay.
And wait, you can keep going. I'll give the answer after you do your next slide.
Right. So the mods and the mentors and all these wonderful people that help you walk through the cryptocurrency world and have your best interests in mind, always tell you to follow the 10 rules of self-custody, which are use a secure platform to make sure that the platform you connect to is secure and that your funds are safe. Use a strong password and don't use a password made of words, for example, or using your birth, what is it? Birthday or birth date. Or,
don't use things that you would know people could guess about you personally.
Or the name, the name of your child or whatever. Use a strong password.
Don't use the same one.
Don't use the same one. And if you can, use different email addresses for each of the exchanges you connect to, if you can. Sometimes it's a bit complicated, but try and do that. Right. Use a hardware wallet to store your private keys offline as soon as the amount of money is substantial enough to be a real disaster if you lose it. I mean, if it's $100, well, doesn't really matter, but well, it depends actually.
Hey, every penny counts. Every penny counts. I've lost so much money moving crypto. I can't even tell you guys how much money between getting hacked and sending it to the wrong address.
Yeah. Every penny counts. But
everybody has. So just be very careful. If you guys have questions, I'm actually going to start doing an AMA once a month or every 2 weeks on how to move crypto. So I have the slides all done. I'm going to get them into to our team. So I'm also going to schedule that very soon. I know we're kind of running out of time and there are some questions. So first of all, I will thank you guys for guessing the answer. 20%. So can you imagine that? Can you imagine having like a couple $1 million Bitcoin and not being able to get it out? It happens every day. It happens daily. I think we have time for one more slide. If we can go, and then I want
to enable the two-factor authentication, which is available on every crypto exchange. Keep your software up to date. That's very important. Otherwise, your computer will be vulnerable and it's not good. Make use of multiple crypto wallets. That's another thing. Split your capital into different crypto wallets, because if something happens to one of them, at least you've got all the others, that can make a difference, really. Avoid public Wi-Fi and use a VPN at all times. Don't share your private keys. Back up your digital wallet and keep your recovery phrase safe. And for that particular thing, I wanted to show you something. It's Ledger that has this wonderful product. Actually, it's called 𝗫𝗏𝗏. It's a solid steel case to store and protect your 24-word recovery phrase, and it's designed to resist fire, water, and
that's really cool. I want that.
It's a metal case, right, with metal tiles in it. And using the character tiles, you recreate your recovery phrase in the steel unit, and you create then an almost indestructible backup, because the steel is rust resistant, and it, if I'm not mistaken, I think Ledger says that it can resist in extreme heat, water, and also impact. And anyway,
I want that.
That's a brilliant thing.
I want that. I do want to answer a quick question in the chat, because somebody was asking, for example, if they have a MetaMask wallet, which is obviously it's an internet-based wallet. If you link it to they want us to know if they link it to a ledger or a Trezor and they're moving tokens, are there fees for that? There are. So, and you have to be very careful when you're moving things on MetaMask because all the different chains, and unfortunately we're running out of time, but we'll go over this if you guys are still with us at midnight Eastern. We'll go over it then. But yes, there are fees. Just be very careful. The token will lie in MetaMask, your ledger will back it up, and then you have, for example, Arbitron, ETH, Solana, Polygon, Mainnet. There's 7 to 20 different blockchains, so you have to be very careful when you're moving it. Hey, Shauna, I see you in there. Hello.
Hey, Beth. Hey, Mams. How are you?
So we had a lot more, but unfortunately we're running out of time. So, Mams, we're going to have to do a whole airdrop session, like make that a whole AMA and do it together. Boom.
Yeah, exactly. Well, now as you can see, it's airdrop season, right? So there's a lot of hype around this topic on social media, especially on Twitter X, where every single day you get hundreds of posts on a feed reminding you that you have missed such and such very lucrative job, but that it's not too late to farm for the next ones, right? It sounds great, doesn't it? Right? Yes.
We'll do that though. We'll talk offline because I think that's important. I think you guys, for the students that are already, have done Sniper Club, make sure you're at Sniper School, and if you're in Sniper Club, you're going to get those already. So Sniper Club is a very valuable tool for those of you that are not in it. Highly recommend it. But yeah, I think let's talk offline and get something together for the airdrop.
So of course they're great fun, they're free money. Okay, and it's true that you can make a lot of money out of them, but it's also scam season. So
yeah, and you just have to be careful too, like liquidity pools and all that stuff. There's so much out there, but you have to know what you're doing. And be careful of scams because people are going to try and replicate the real thing. Like I stake my PIF on the PIF staking network. I stake my Osmosis and my Atom and my got a couple other things, Tia on my Kepler. Staking is a whole other topic, but yeah, we'll get to that another time because I don't want to take up all Shano's time because he's a legend. It's a muscle for you. My muscles are going away. I haven't worked out in so long.
I will wrap it up very quickly, right? So it will take me about.
That's a good idea. Let's make a take picture.
So for farming airdrops, right? Rules: always use a VPN. Always check links and websites from the official account on Twitter X. Never click links inside random posts on social media. Never click sponsored links on Google search pages. Always double or triple check if the information you have is legit. Always use a burner wallet with very little money. Only to pay for transactions and gas fees and things. A burner wallet, it's easy. It's just a wallet that you actually create only for such or such airdrop, right? And once you don't use it, don't put any money on it, and that's it. Never give away, of course, your seed phrase, password, or personal information to anyone. And use the tools that I'm going to present to you on the next slides. Again, there are protections against wallet drainer, malicious codes, hacks, exploits, and so on and so forth when you sign transactions or connect your wallets to dApps. So the first tool is called Wallet Guard. The address appears on your screen. It's an extension for Chrome and Brave, actually. So you install it exactly the same way as you would for a MetaMask, 𝗵𝗵 wallet, and all this. It's very user-friendly and intuitive, so it's a no-brainer. Once you've connected your wallet, it will run its first security scan for you and make sure that your wallet and your funds are safe. It will notify you if your wallet extension extension is out of date, so that you can correct the problem and update it manually. And it will also revoke all open approvals that could put your funds at risk. And once it's installed, it runs in the background, and each time you're about to sign a transaction or when you connect to a DApp, it checks the code for you and tells you if the code is malicious or if it's safe. And that's a great tool. And there's another one which is great too. It's called Pocket Universe. This tool functions on exactly the same principle as Wallet Guard, but it's equivalent for Mozilla Firefox. Right, so it has an advantage, in my opinion, over Wallet Guard, which doesn't actually offer this service, but I will have to check it a little bit further. But Pocket Universe actually insures up to 50% of your funds in case your wallet is drained, because Wallet Guard and Pocket Universe scan the code when you connect to a DApp or when you're about to sign something or approve something, and they tell you, well, it's safe or it's dangerous. In the case of Pocket Universe, they insure your funds in case your wallet gets drained, and they didn't warn you beforehand, up to $2,000, which means that if, for example, you buy an NFT for, I don't know, let's say $2,000, right? And you get drained because you didn't get the proper warning from Pocket Universe, then you can get your money back. Or no, it's half. Yes, no, it's half of what? So $4,000, you can get $2,000 because they will give you 50 of your money back, right? 50% of your money back. But it's really good. So I think it's really worth checking and installing on your browsers. Okay, I've finished. Sorry. Here we go.
Sorry, Tona, we're so sorry. We had a whole thing, but thank you guys so much. Apologize for my sound in the beginning. I had like 4 different StreamYard sessions open because I've been on here since like 8:30 in the morning. But I'm gonna listen to you, Shauna, obviously. If you want, I'll monitor the chat for you in YouTube for a little bit. But thank you all for listening. Any questions, please tag us. We're in Discord all the time, and we will be doing an AMA together, and or myself and or with other mods on how to move crypto and on airdrops. And with that, I'll see you guys at midnight Eastern if I'm still awake.
Okay. Hope it was helpful.
So appreciate you guys. Thanks for being here.
Thank you. Thank you, legends.
You guys are in a great place. The best place to learn. We've got you.
Hey,
thank you.
Mams, Beth, can you hear me?
Yeah.
Yes.
Ah,
you're great.
Fantastic.
Your sound is good.
Worried. Thank you, ladies, so much.
Great job. I'll monitor the chat for a little bit.
Yeah, thanks. It's security. It's almost a rite of passage into crypto to get hacked or drained at least once. And just by following some of the tips that Mams and Beth have sent here, using that burner wallet, if you're connecting to something, splitting your stuff up across different exchanges, different wallets, it just makes sense. Not having all your eggs in one basket.
That's it. Yeah.
Yes, I could not agree more. I could not agree more. I think everyone I know has been hacked or have moved something wrong at least one time. I haven't. If they tell me they haven't, then I don't believe them. But we're here to prevent you guys from that. Now you have us, so we hope this never happens to you.
And I do love that ledger, that metal case for your seed phrases. Unfortunately, I've got that many wallets on different networks that it would be a few $1,000s. But just even something, if you don't have the money for that, what I've done is I've got a photocopy of all my handwritten seed phrases, and and or a couple of photocopies, and they are. I have one with each a different friend, and
Perfect.
my backup card for my Tangem wallet is also in an envelope with my name on it. In a dear friend of mine who I trust implicitly, in her safe.
You have to trust a person.
Yeah, on a different site. You know, there's no point in having all your seed phrases if you don't have one of those metal things, having them in your house. We've had some of our team members' houses burned down. We've had that sort of thing.
Yeah, it's
so
awful.
even if it's just a photocopy, don't store it online. Even if it's just a photocopy with a trusted friend, at least you could get back in.
Absolutely.
Okay.
Don't store it online. Don't store it on your computer.
Don't take a picture of it, because I used to do that. I used to take a picture of it. Like, I think somebody can hack my phone. Never again.
No,
Never
you
again.
can. No, I think you can take a picture of it, but then you send that picture. You put that picture on a USB card with key, for example, and you delete the photograph from your phone and from all the devices that and you don't leave it anywhere. I think
exactly. Well, thank you so much. I'll be monitoring the chat for you, and I'll see you guys very soon.
Thank you very
much.
much.
Thank you, Bev. Thank you, ma'am.
Yeah, you're a legend. I'm going to be listening very carefully.
Absolutely. So, how is everybody? David's going to be putting my screen up in a minute.
Yeah.
There we go.
Right. Sorry.
So I've had to swap my two sessions around. This presentation, I've done a large part of it in the past, and I wasn't happy with the. I'm going to be assessing later on in about 8 hours' time, somewhere around there, after our break. I'm going to be looking at different ecosystems and whether there is another ecosystem that can actually flip Ethereum in the number 2 spot. So I am going to be looking at that, but not this session, in the next one. Right. Session I'm going to do now is a basic rundown between what's the difference, people. We often get asked in the school, what is the difference between margin and futures? Okay. I'm going to run through that with you guys. I'm going to help you understand some pairs, and I am going to, if I have time at the end, we will probably run short on time. I will have a look at a Bitcoin chart on a very, very higher time frame. Okay. So this is basically the things I'm going to go through in the order. All right. We're going to crack straight on with it. Now, anyone who's watched Sheldon's YouTube videos or been through the sniper school or been through anything like that will understand that or will have noticed that Sheldon sometimes talks about maximizing through a run, maximizing your profits. And over a sort of a 3-year period with literally 6 trades, he did a back testing on the Atom and Ethereum pair, and how actively managing it and swapping between Ethereum and Atom over time on a very large time frame, you can actually build up from 1 Ethereum to 20 something Ethereum in over a period of time, quite easily. And there's no reason to stop there. You keep going as long as crypto's around. Now, there seems to be a bit of mystery around pairs. People don't quite understand it. So I'm going to clear that up very quickly. Everybody here that has done a trade, whether you've just bought a little bit of Bitcoin or Ethereum, Cardano, it doesn't matter. If you've done a trade, you've traded a pair. Okay. Essentially, when you look at a ticker is that little 3-digit code that they use on the exchanges, on TradingView, to find tokens and pairs. When you look at BTC, USDT, that is a pair, because the USDT or Tether is purely a token. It's a blockchain token that represents the value of $1 US. That's all it is. Okay. And regardless of whether you're looking at foreign exchange, where you look at AUD USD, which is the Australian dollar, United States dollar, or the Japanese yen compared to the euro, or they are all trading pairs. Okay. Now, all of us start out in essentially trading just the USDT pair. That's what we do. And when you look at that ticker, the first part of it, in the case of the top line there, BTC, USDT, the first part of the ticker is known as your base asset. That's what you're looking at. Okay. The second part, the USDT, is known as your quote asset. So if you wanted to hit a buy or hit the green button and you were looking at the BTC USDT pair, you'd be buying the base asset, in this case, Bitcoin. You'd be paying for it in USDT, the quote asset. If you sell, you'll be selling your Bitcoin and you'd be getting back in compensation or in as a return, you'd be getting your USDT. And that'll work the same if you're trading BTC Euro, okay, Ethereum Euro. If you hit the buy button on that ticker, you would need to pay for it in euro. And if you hit sell, you'd get euro back. Okay. So with that understanding, we can look at the different types of pairs, and you would see them in different exchanges. So there's really that explanation I've just given should clear up this little mystery here. Okay. I've already been through the Bitcoin USDT, so in the case, some exchanges will offer you an Ethereum or a Bitcoin USDC, which is just another token that represents $1. Okay. And if you're on the USDC chart and you're trying to buy, but you've only got Tether, you're not going to be able to buy because you don't have any. They expect you to pay in that second asset. So breaking down the pairs, if we start looking at other charts and we want to move completely away from, I almost want to say shitcoin, like US dollars or fiat currency, but you can stay 100% in crypto by using these sort of charts and trades. If you went down to that, like Ethereum, Bitcoin, if you're holding, what have you got? Say you got half a Bitcoin, right? And you're looking at the Ethereum Bitcoin chart, you could actually buy, because if you hit buy, you're going to get Ethereum. You're going to pay for it in Bitcoin. And later down the track, if you hit sell, you're going to get Bitcoin back instead of, when you sell your Ethereum, you're going to get Bitcoin back instead of USDT. And the same goes with the Atom F pair. Okay. If you're holding Ethereum and you hit the buy button, you would get Atom and you'd pay for them with your Ethereum. And when you hit the sell button, you're going to give your Atom to someone else, and in return, you're going to get Ethereum. Whether you're looking at the XRP or Ripple and Bitcoin chart. If you've got Bitcoin, you can buy Ripple with it. You can sell. Now, different exchanges have different pairs available. Okay. The most common quote asset you're going to find is Tether, Bitcoin, Ethereum. Essentially, those are the ones you're going to find on most exchanges. You're not going to be able to do, say, a Solana Dogecoin pair. Most exchanges won't have that. But check the exchange you're on. You will have some, they see what's there and see what you can do with it. Whenever you are trading, regardless of whether you're looking at Bitcoin USDT or Ethereum USDT. The fact of the matter is, if you are here, if you buy in this little green circle here, and you wait for it to go up, so let's focus on the Bitcoin USDT. If you've got some USDT in your wallet, you buy it here, and it goes up, and you sell it there, you're giving back your Bitcoin, you're getting USDT. You're going to have more USDT. The same as if we're looking at the Ethereum Bitcoin chart. If you buy Ethereum with Bitcoin there, and it goes up, and you sell it there, you're going to have more Bitcoin than you had down here. And the same with the other direction. If you're selling up here and you're looking at the Ethereum Bitcoin, and if you're selling, you're giving up your Ethereum, you're getting Bitcoin in return. And it goes down, and at the bottom here, you hit a buy button. Essentially, you're buying more Ethereum, and you're paying it with your Bitcoin. So you would have more Ethereum at the bottom here. All right. I hope that makes sense, but I'm going to show you essentially how we can actually use this. Now, every 4-year cycle we have, money seems to flow in the same sort of direction. Okay. If we look straight down the center of this money flow chart here, people start off with fiat currency, whether it's euros, US dollars, Aussie dollars, Canadian dollars, doesn't matter. They tend to start off in that. A great example of that at the moment, if you've been watching the news or keeping up to date, is the Bitcoin ETFs. The volume, the sheer volume of US dollars coming in and completing this first step, going into Bitcoin. And these ETFs from BlackRock and the likes are buying Bitcoin to put in storage so that they can sell their ETF as a product to these financial institutions. Now, down the track, we may find that they're going to approve a Ethereum ETF. And at some stage in the market with the money flow, once people have made decent profits in their Bitcoin, they want to diversify those profits and look for another pump. And the money tends to flow into your larger cap alts, particularly Ethereum first. And then after that, it will flow into your larger projects like your Cardano, your Atom, your Solana. Okay, it's going to flow into those projects. And when people have made money on that, they tend to take those profits and they invest them into the smaller sort of projects, because they'll be the next ones that are going to get an exponential jump, right? And near the end of the bull market, you'll start getting some coins, the exponential gains of meme coins and low caps and stuff at some point when the total hype and everyone's hearing about it. And, even the guy at the news agency said to me a couple of days ago, he actually said to me, hey, the lotto's got a $30 million draw on Saturday. Do you want a ticket? And I went, dude, I stopped buying lotto tickets 3 years ago, and the money I used to put in into lotto tickets, I put into Bitcoin. He goes, really? He says, I read in the news just the other day, it's like over 70,000 Australian dollars. It's crazy. I went, yeah. He said, I bought about 3.5 million Shiba Inu about 2 years ago, and it went to nothing. I haven't looked at it in 2 years. And that is typical retail. That hype is people jumping in and buying. That's what happens at the end. And that's when your news agent guy, your taxi driver, your Uber driver, whoever start talking about it, that's when we have to start selling. But leading up to that, by understanding the Bitcoin USDT pair, right? You're not going to sell anything until we start getting those signs that the market's getting exhausted and it's ready to start taking these profits. Okay, so understanding how those pairs work with your base asset and your quote asset. If you're sitting in US dollars now, your first transaction is going to be a buy, because you'll be looking at the Bitcoin USDT chart. You hit buy, right? And that will sit you with a bag of Bitcoin. And when the time is right and you feel it's ready to move to this next lot, the larger caps, you'd then be looking, because you're holding Bitcoin, you'd be looking at an Ethereum Bitcoin chart. And what you're doing, you're hitting buy again. We're not selling in a bull market when it's this bullish. We're not selling. We're buying. This difference here is you're buying Ethereum, expecting this next move from Bitcoin into those larger caps. So you're buying Ethereum with your Bitcoin. And when the time is right and you see this money starting to move into the mid caps, okay, you're looking at the Atom Ethereum chart or the Solana Ethereum chart or any of those, right? And you'll be hitting buy again, your third buy in the row. But you're buying those mid-cap alts with your Ethereum. And at the end, when everyone's advising you to take profits and you're all greedy, I hope you all remember that's the time to start hitting the sell button. Slowly start laddering out and bank those profits, because the saying is always there. If you don't take your profits, somebody else will. Okay? So, moving on. Let's understand the difference between futures trading and spot trading. Okay? With spot trading, when you place a buy, you are buying that base asset. Whether it's Bitcoin, whether it's Ethereum, you are buying it. And when you buy something on an exchange when you buy any token on an exchange, it is yours. You are the owner of that. And you can now take that token and you can if you plan on holding it for a while, you can send it to a hardware wallet for safekeeping. Because when it's on an exchange, if it's not your keys, it's not your crypto. Okay. You own those tokens. You can do what you want with them. You can send them to your safe wallet. You can lend them to somebody. It's called staking. You can lend them out as liquidity on different protocols, and you would likely get either qualify for airdrops, or you may get a return or a yield on your tokens. But spot trading, you own that token. The difference with futures trading, you at no point ever with futures trading do you own a token. All futures trading is a contract that you speculate on the movement in price or a change of price in a token. Okay. Now, essentially, because it's just a contract, they do allow you to secure that contract or that position size with a smaller percentage. Okay, and the terminology on that is your margin, okay, your leverage, and your position size. Now, with futures trading, it does have certain advantages over spot trading, in that if you're doing it to gain or to make profits, when you place a contract order for a futures buy, because it's purely a piece of software, it does allow you to place a stop loss and a take profit at the same time as placing the order. Okay, If you placed a limit order or trigger order at a certain price and it wasn't picked up, you're not going to lose anything. The contract doesn't get executed. But if it does pick up, automatically your stop loss and your take profit are in there. And if you plan your trade, you can do that. The disadvantage spot would have over that derivatives platform is that you cannot sell something you don't own. So you cannot place a stop loss, or you cannot place a take profit until you actually own the token, until your buy order has been executed. Okay, so important difference over there. You need to understand those two. Now, let's look at an example here with essentially profiting or making gains from trading. And this is something most of the time markets will move sideways. Okay, there's only 3 directions the market can go. 1, up, 2, down, and 3, sideways. And you will notice that if you look at any chart, they essentially tend to, whether they make a big move up or a big move down, it's usually pretty swift. And then you get this sideways accumulation happening like that. And that is the sort of price action we see most often when you look at number of hours watching a chart, is a sideways. So I'm going to take an example here of, let's say you've got $100 and you're looking at any particular token and you decide, okay, I can see this range forming, or I've seen it over here. I'm expecting it to bounce up and down between the two. You can essentially place a buy order, buy 11 tokens here, right? Once you own those tokens, you can set a stop loss. You can go, okay, I'm only willing to risk $6.50 if this doesn't go my way, because we can't, there's no certainty in the market. We can't tell which direction it's going to go. We trade on probabilities, and we put in measures like stop losses to protect our capital. The number 1 rule, capital preservation. But in this instance, let's say you started with $100 and you bought 11 tokens here, and it went up, and you know that this level here of $11 is a sort of a resistance, or it's been the top of the channel, and you sold those 11 tokens at that price, you'd now be sitting with $121. Congratulations, you've made a $21 profit. At the end of the day, if we follow the cycles, we all expect these tokens to be worth more in the next 12 months than they are right now. So at this point, you may go, I want more tokens, but I know that I think this price is going to come down. So you wait for it, and you wait until this yellow circle here comes back in. And you can take your $100 plus your $21 profit, your $121, and you can buy the full amount of tokens again. So as this has moved down, and you were sitting in USDT or in whatever, essentially you've bought more, and you now have 13.4 tokens. You had 11 before. So your profit in this move is 2.4 tokens. You've got 2.4 tokens more than you had without taking extra money out of your pocket. All right. If you took $100 divided by 13.4, okay, that's going to give you an average buy price of somewhere around I forget what it is now. Pop in the chats if you got it. Around the about the $7 something. Okay. At no point in this step, in this process, was the token selling for $7. You've only ever taken $100 out of your account. But what you've done in these two trades, if you have reduced your average cost of your tokens, okay, from initially $9 down to about $7.80 or something. Fantastic, right? Regardless of whether you've done this process, okay, if you just sat on these, regardless of whether this token goes to $100 or $50 or whatever, you're still only going to have 11 tokens. But regardless of whether you've got 11 tokens or you've got 13.5 tokens, it's still going to go to the price it's going to. And when it comes time to take those profits, you're going to have more US dollars or whatever you're trading in, whatever quote asset you're preferring at the end of the day. Okay. Hope that makes sense. Pop in the chats, guys. All right. Most exchanges do offer margin, and margin trading is a little more complicated than, or it's a bit of a combination of spot trading and derivatives or futures trading. Okay. It is usually found on your exchange, and you'll see when you choose a ticker and you're looking for something to trade, you'll see some of them have a 3x or a 10x or a something next to it. If you looked at, say, the Ethereum Bitcoin pair or Ethereum USDT, most of them have that little, and they do, depending on exchange, they'll allow you to take a margin of anywhere between 3 and 10x. Okay, they don't offer the 100x, 125x, 200x options like they do in the futures market. But with margin trading, you are actually buying or selling the actual token. Those tokens are 100% yours. Okay, but the easiest way to explain how it works is buying a house. Okay, when you're trading on margin, you're essentially performing the same type of transaction as when you buy a house. So you've got $50,000 in the bank and you are on the market, you are wanting to buy a house. You approach your bank and you say to your bank, I've got $50,000. I want to buy this house, which is $500,000. Would you lend me the $450,000? And your bank will assess your credit rating, they'll assess your thing, and they say, yeah, we'll do that. But until you've paid off your $450,000, essentially, we own your house. Okay. So when you look at your own personal balance sheet in this situation, you have an asset, a house, which when you bought it was worth $500,000, and you have a liability. You have a loan you need to repay back to the bank. You have a liability of $450,000. Okay. Regardless of whether that home drops, the value drops to $400,000. Okay. Things like that have happened in the global financial crisis, 2008. There was a massive squeeze on mortgages. The value of property dropped. It can happen. But regardless of whether that happens or not, you have an asset. You have your house. Maybe in the current market, it's only worth $400,000. You have a liability. All right. That liability is $450,000 loan you need to pay back to the bank. If you decide right then, okay, I'm going to sell my house for $400,000, you still need to pay back the balance of $50,000 to the bank. On the flip side, though, if the value of that house climbs to $700,000, you're still sitting in the same, with the same balance sheet. You have one asset, your house. You have one liability, $450,000 to the bank. regardless of whether you keep that house or sell it, at some point you have to pay that back. So if you decided, okay, I'm going to sell my house now for $700,000, you pay back your $450,000, okay, and you've now got $250,000 profit. Now, if you keep that analogy in mind, you will understand margin trading, because that's exactly how it works, okay? What margin trading on exchanges allow you to do? If you're sitting on a bag of, say, remember our 13 tokens we had before, right? You're sitting on that bag of 13 tokens. The exchange will allow you to use those tokens as collateral, okay? And if you're down here and saying, okay, I've got 13 tokens, I don't have any cash, but I want more because this is going to pump, right? You can actually say to the exchange, here's my 13.4 tokens. I'm going to borrow $117 and I'm going to buy another 13 tokens, okay? So your balance sheet, just like the house now looks like, I've got my asset. I own 26.4 tokens, but I have a liability. I have a $117 liability I need to pay back to the exchange at some point, okay? Regardless of whether that trade goes up or it goes down, you look at it here. If that token now goes up to worth $10, until you sell it, you still have an asset, 26.4 tokens. You still have a liability, $117, okay? Goes up to $11, you still have an asset, 24.6 tokens. Still have a liability, $117. If this did happen and you decide here, beautiful, it did exactly what I expected, okay? You can decide to sell a portion of that asset. So in this case, you would close your trade, but you only have to sell 10.7 of those tokens to get $117. So you can sell 10.7 and you pay back your liability, your $117. So you're all square with the exchange, and the exchange will now let you withdraw those. Once again, they're yours. But if you look, you've just gone, without taking any extra money out of your pocket, you've just gone from 13.4 tokens to 15.7. You've just made a 2.3 token profit, okay? That's what's happened. And if you took your original, remember you originally only put $100 in here. You take $100 divided by 15.7, your average buy price now for those tokens is down in the $6 area, okay? But you're sitting with your tokens and you've made profit. Now, we're all expecting, my strategy for this is what I'm doing with the HODL tokens that I want to hold for the next 12 to 18 months, okay? I don't want to be in cash at the moment. I want to be in these tokens. That's why I bought them in the first place. So my strategy for this, and for the way I'm particularly using this, is to end up with more tokens, because I want more tokens, okay? So, but I also don't have extra cash to take out of my pocket. So in an instance like this, my stop loss here, okay, I borrowed $117. I bought an extra 13 tokens. All right. I own those 26 tokens, but as the price of those tokens is dropping, the portion of my liability, I still have to pay back $117. And if the value of these tokens went down to from $8.50 and $9, $8.50, $7.65, when they start getting to a price point where the exchange is looking like it's not going to get us $117 back, they will liquidate you. Just like your house and your mortgage. if you stop paying your repayments, or if the value of your house drops significantly lower than how much you owe the bank, and you can't make up extra payments to cover it, they will take your house. The same with exchange, they will take your tokens. So you can get liquidated in this. And this is why it's so important to really understand spot trading, and first step, be a profitable spot trader. Okay. Then understand futures trading, because it's a lot easier to get your head around it, to understand what leveraging and how it affects your profit and loss, how particularly your losses and that sort of thing. So if you're new to trading, please do not do this yet. Get your head around the other stuff. But let's go to the next slide, okay? In an instance like this, if you know this is probably going to go on the way down, okay, but you still want tokens, because we know it's only a retrace. We're still expecting bullish price action for the next 12 to 18 months. But we know there has to be a retrace. A healthy market needs to come back and balance itself, okay? And if you can recognize these sort of instances, what you would do in a situation, now we've got our 15.7 tokens, right? You can turn around to your exchange and go, hey, I want to borrow another 15 tokens, okay? And you really think it's going to go down. So you can now, if you borrow 15 tokens, and you sell all of them, okay, sell all 30.7 tokens, you're going to end up with an asset. Your asset is $337, but you've got liability. You owe the exchange 15 tokens, okay? Regardless of whether the price of that token starts skyrocketing. If that token went to $20, you're going to have to pay back your 15 tokens. So out of your 337, you'd have to buy 15 tokens, which cost you $300, okay? Pay them back to the exchange, and you're left with $37, right? But on the flip side, if you are right, and once again, you need to prove you're a profitable trader on spot first before going anywhere else. But regardless of where this is going, whether it's in that orange circle, you still have $337. That's your asset. You still have a liability of 15 tokens, okay? And you have to pay them back at some point. You come back down to this $9 resistance, and you decide in this green circle, that's exactly what I wanted. You take your $337, you buy all the tokens you can, because that's what we want. We want tokens at the end of this bull run. So you buy as many as you can. You would get at $9 37 tokens. So you give the exchange their 15 tokens back. You settle your debt. You've no longer got a mortgage, okay? And you're now sitting at 22 tokens. Right, you have made a 6.3 token profit. Now, regardless of whether this token eventually ends up at $50 or $20, okay, or even if it ends up at $2, regardless of whether that happened, without actively doing these little steps I've just showed you today, remember we started with $100 and we had 11 tokens, okay? If we did nothing and that token goes to $20, you've got 11 tokens. You've turned your $100 into $220. If you've actively managed this and you haven't taken any more money out, you've just used the market to grow your number of tokens. At the same time, all right, if that token goes to $20, you now hold 22 of them. So you've now turned your $100 into $440. That's a 3x compared to a sorry, a 4x compared to a 2x on if you just held them. Okay, so it is a very powerful tool. In a situation like this, I still want to end up in tokens. Okay, in a case like this, I still use a stop loss. All right, I still use a stop loss. I owe this exchange 15 tokens. I don't want to get to $20 because remember here, my asset was 337. I owe 15 tokens. That's my liability. That is, sorry, my phone keeps going off. Why are you phoning me? You're not watching YouTube? Okay, so train of thought. If this went to $20, I still have to pay back. So in a case like this, I want to end up I want to end up in tokens. My stop loss here would be okay. This is now invalidated my thought process or my trade. So I'm going to take that 337. I'm going to buy as many tokens as I can get with it at $1.50. All right. So essentially, I'm going to be able to repay my 15 tokens to the exchange. I'm left with about 12.6. Yeah, you know what? I've taken a 0.8 token loss, but I've protected my number of tokens because that is my focus for this process or for the strategy I'm using. Okay, is to have more tokens, and I don't have endless amounts of cash to take out of my pocket and keep doing this. But if I have a handful of tokens, that I can manage, I'd rather have a bag of 4 or 5 I can actively focus and do this than a bag of 50 that I just can't manage, and I'm just going to end up with however many I bought last year. I'm going to end up with that same number of tokens in 18 months, regardless of what they go to. I think this would be a more profitable way to approach the market. If you are profitable in spot, you can do this, and you can do this side by side. There's no reason, if your token here happened to be whatever this token is, all right, and you're spot trading on the one side to make dollar profits, okay, and it happens to be a token that's on your HODL list, you can do this at the same time with your HODL stuff as you do your whether it's a small leverage trade or something. You've already analyzed the token. You've already got a thesis on which way it's going. You already know you're profitable. But you can run these two side by side. One system is building you more cash to buy more tokens. The other system is building you more tokens to have at the end of the bull run. Okay. Right. I'll give you a quick summary, and I'm going to try and cover one more thing. I know we're going to run out of time soon. I am looking at, I'm trying to, yeah, thank you, Health, Wellness, Faith. She did post in the comments that the 15.7, you've reduced your cost down to 6.3 at $6.30 something, when the lowest price it was at any stage in this was $9. Okay. Let's do a like $100. You've now got 22 tokens. Your average buy price is under $5. Okay. And they haven't sold under $5 since probably 2019. I don't know. Anyway. Right. So just a quick summary for you guys, and I'll show you something else. Spot trading, you can accumulate tokens on the way down. If you have sold and you now have your asset is dollars and the token drops in price, right, and then you buy lower down, you're accumulating tokens, right? When you buy a token and you wait and it goes up, all right, and you sell it, or you sell it higher up, you're accumulating dollars. So when the market's coming down, You're accumulating, and you're holding dollars, you're making tokens. The other way up, if you're holding tokens, you're making dollars. Futures trading, or derivatives, I've called it leverage on the slide. You're actually only accumulating dollars regardless of which way the direction the market moves. As long as you're trading in the right direction, you can't walk away with, you're accumulating dollars, and those dollars are yours, and you can use that to buy other tokens. Great. All right. Using margin, you can actually be accumulating tokens in both directions. If you understand it, you can be accumulating tokens when it's going up. You can be accumulating tokens when it's going down. All right. Important thing to remember, with margin, most exchanges, and I've traded margin on 3 or 4 different exchanges, they won't give you your profit and loss percentages. You need to manage that yourself. They won't, at a glance, you won't tell, you know you have this profit, this liability. You won't be able to tell at a glance, am I in profit or in a loss? You need to be able to manage this. You need to be disciplined. You need to have records of it. You need to have in your mind when you've bought exactly what your stop loss is. You need to think about, okay, but I've got 13 tokens. I've borrowed another 13. I'm at like a 2x here. All right. So if it moves 5% in the wrong direction, I'm losing 10% of my tokens. You need to be able to manage this. So I highly recommend spend hours and hours, become a profitable spot trader first. Don't touch this if you're not. Okay. Don't touch leverage or futures trading. If you're losing money in spot, all leverage or futures trading is going to do is multiply that loss. Okay. When you understand those and the effects they have on your potential losses, because we focus on potential, what if it goes wrong? That's risk management. Once you understand all that, you can try this, okay, with a small position of your portfolio at first. Awesome. We've got about a few minutes left. I expect David's going to jump on and kick us so he can get some sleep soon. But I am going to show you guys something. Let's go here. Right. So we are looking here at a Solana chart. And what I was doing here, I was these little retraces back in November, okay? Back here in November, I was playing a little bit of this and farming some of my SOL and building up nicely. And we had this massive peak up. And when you look at this from there to there, we had 100% increase without a retrace. And I thought, if you get a 2x pump, okay, there's no way it's not going to sit and consolidate here again. If you know your chart patterns, what I saw here was a rising wedge, which traditionally is a bearish pattern. These normally break out to the downside, only about 68% of the time, but they do. So what I was doing, I was looking, okay, we need to consolidate here a bit. And I sold all my Solana at about $46, somewhere around here, right? Look what happened. I didn't have my stop loss. In this case, my stop loss should have been, you know what, if it pumps to 49, I need to buy more, right? And I'm thinking, there's got to be a retrace, got to be a retrace. And what ended up happening is I was sitting in cash and Solana kept going and kept going and kept going, okay? And it just never retraced. In the end, I bought my Solana back here at about, I was expecting it to come down initially back down to this $30 mark. And then I thought, no, come on, it's got to come back to test this 45. It didn't. I bought half of it at 50 or 52 over here on the retrace. But I had a fair bit less than I did. And I was hoping to load up again further down. It didn't do it. In the end, I bought back the other half of my bags here at 60. I think I got that week down about $64. Okay. I'm sitting on a lot less Solana now than I had. So my recommendation, yes, use this. Do not fade such a strong market. Okay. Stay in your tokens, protect yourself. If these tokens you plan on having at the end of the bull run, keep them. Do not sell them. Focus when the trend is your friend until it ends. Only buy, do not sell. So when we go back to this section here, and I go up to that long, yes, do this. If you get it slightly wrong, the chances are get it slightly wrong down here and it comes down, okay, hopefully with a bit of patience and time, the probability is in this sort of market is going to go up. And I had a Bitcoin chart there I wanted to show you as well. I do expect a pullback, okay, I really do. We might not get it. We've got so much fiat institutional money coming in with these Bitcoin ETFs and everything else. We might not get the school, get a retrace. We might just keep going. Okay. I wanted to show you this on basically the 2012 halving, when similar macroeconomic, we had a heap of stimulus from the GFC where all the governments had the printers running like this, tick, 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 tick. And there was so much excess cash. We didn't get that retrace, okay, before or after the halving that we had in the 2016 and 2020 halvings. We didn't get it. And it's possible it's not going to retrace. If you're not in yet, it's not financial advice, but I'd like at this stage, if you've got some spare cash, watch the market, but at some point you're going to have to enter. If we get a retrace and a dip, then it is a gift. It's a gift from the crypto gods. Buy. Even if you think, oh, I'm just going to hold out, I might go another $2,000 less, maybe $1,000, or maybe it'll go to 38, maybe it'll go to, if you have these big red days, my recommendation is buy. You can always use this, okay, to lower your cost at the end of the day. But once you're in, you're in. Don't give them away. Don't give BlackRock your Bitcoin or your Ethereum, okay? So I would be doing, since my Solana experience, I have been doing this strategy. I am not fading the market. I am not selling anything. I am not risking sitting here in cash, owing somebody 15 tokens. That's just jumped 20%. Okay. That's my strategy. That's the way I'm playing the rest of this bull run. I do hope that everyone's got something out of this. I know we were due to take a break, and I think David's been up for about 15 hours. He was, I think we're going to have an intermission or an interval now and pause the stream for a few hours. Not sure, David, if you're there or if there's anyone else who wants to jump on.
Yeah, I'm here. So yeah, pretty much it's 12 p.m. GMT, so we're going to have a quick break. We'll be back at 6 a.m. GMT for the third and final session.
Fantastic. Get some sleep, David.
Yeah, I'm planning on it. I'm sick about doing this also. It's going to be the best sleep I've had.
Absolutely. Absolutely. We'll see you nice and refreshed. Guys, set your alarms. If you're on the other side of the world, like right now, it's 10 a.m. In Australia and the East Coast, well, where I am. Go out, take a walk, get away from the screens, enjoy yourselves. If you are on the other side of the world, where David and them are, or the UK, South Africa, get some sleep, get some rest. I'm not sure if Beth is still here, but she has been online pretty much solid as well, as long as David has. Get some sleep, everybody, get some rest, set your alarms, join us for the next stream. Session 3 is going to be more alpha. Okay. Hit the likes and please come join us. We're all going to take a break.
Cool. Well, thank you very much, Shauna, for doing it and finishing off, man.
No, you're welcome.
I'll be seeing you whenever.
I'll see you in a few hours.
Yeah, bro.
Thank you, everybody. Trade safely.